All right, so this tool is very useful, and it'll make sure, depending on the actual trade setup, depending on the stop loss and your account balance, your risk percentage should remain the same, 2%, 1%. If you're only taking one trade per day, and if you want to go to 3%, I believe the most that you can risk on a funded account, if you was to lose the trade, is 5%, and you don't want to do that on a daily basis. So the most I would say your risk on the trade should be about 2%. If you're feeling real spicy, or if you see a trade setup that is giving you a very good win to loss ratio, if you want to go to 3%, that's totally up to the trader. But on average, we say you shouldn't risk more than 2%. So if your stop loss is only 10 pips because you're using a lower time frame, then on that 2% trade, you can do a 0.20, which is $2 per pip on the exact same account balance. But being that of course the trade setup is different because you're using a smaller time frame, it'll give you a better chance to catching more or winning more based off the trade setup. Now with the lower time frame, we're gonna go to current time. On the lower time frame, it's not like we're gonna get a 100 pip move or a 50 pip move, unless of course we're using the hour, the longer time frame, then of course the longer the trade. But if we're on like a 5-minute chart or a 3-minute chart, or even here the 1-minute chart, the most I would look for 10 pips, and once it gets to 10 pips, I'll start taking profits, closing partial profits, or ultimately moving the stop loss into profit, so that if it does pull back, then of course you're not losing any money. So this is, what's this? This is EuroCAD. Now notice here on EuroCAD, we're on a minute chart. The zone is the same. And ultimately, the zone will be a little bit different on Golden Key, but on the session key, I believe the zone is the same. The zone is a 20 pip zone, which is not bad. So the ultimate goal, a lot of the times during the session, you'll get accumulation. And then once we start getting movements in the market, your zone can dictate whether it will be the high of the day or the low of the day, in a sense. So in this zone, on this day, we notice and we caught a buy out of the zone. The current low would be the bottom of the zone. So this trade can run for the entire day and go to the upside. It may start stalling above the zone, but it'll dictate that this low is the low of the day. So once you break the zone, you're in bias territory. And notice here on this minute candle, we got the break. And the first thing I look for, of course, depending on the trader, some people have different trading tactics, but a lot of the times, especially in the retail sector, people will wait for a break of the high, in a sense. And then now if we're buying, and if we know how the markets actually work, you don't necessarily, unless of course it's just going to be a runner and it's going to continue to buy. But a lot of the times when you want to buy, and you know that you want to buy because it's now indicating that we're in bias territory, you want to buy it at the lowest price possible, right? So even in the case when you get a break of the high, a lot of the times, or a break of a zone, you will see a pullback. There's going to be a pullback just to test to see if that zone is going to be now support, because we're above the zone. If it comes back to the zone, we want to see if it respects it. So in here, in this case, and same rules apply. We're going to throw a little bit of technicals in there. In our live sessions, we're going to start pulling up the heat map, showing people how to utilize the strength meter of each pair and kind of correlation with the weak and the strong. That way you can find which pairs to trade for any given time period based off of the weakness or the strength of each pair. But in this case, we noticed that we're buying out the zone, and it came to retest the zone. Almost to the pip. You got your retest of the zone and never came back into the zone. This is where your buying opportunity comes into play. Now it may buy, and there'll be times it'll buy, whether it's the minute chart, 5-minute chart, hour chart, you may get a buy signal and it may continue to go into bias territory without even giving you a chance of a pullback. So in those cases, we just got to kind of find our way into the market, or ultimately just follow the buy signal. If people are brand new, they don't necessarily understand technicals or things like that, we're going to get into the technical sides in our live sessions. But if they don't understand trading at all, all they really have to do is just follow the signal. If this is your buy, you can jump in for the buy, and your stop loss, depending on how much you want to risk, ultimately your stop loss can be right under the zone, or I believe this is 10 pips. Your original stop loss is 10 pips below the zone. But you can also, if you want to take this trade and lower the risk, that's an alert. You can use previous lows. You have a previous low here. You have previous low under this consolidation here. You have an ultimate low here. So that's kind of up to the trader on how you want to trade it. So if I wanted to take this trade on a minute chart and I didn't want to risk much, I can utilize the previous low as my stop loss, or right below the previous low. So if I'm taking this buy off of the retest of the high of this buy, and I want to test to make sure, if I want to take this trade, all I have to do is really risk. What is this? This risk is only about 5 to 10 pips. So if I'm taking this trade on a 10 pip 5, well, that was 6 pips. And I'll go back to my position size calculator, and the stop loss is 6 pips. Then I know I can trade a 0.33 on this trade. And as we can see, not only did it go up once, but it came back a second time to give us a second entry. Now, the conservative way, like I said, conservative traders in the retail sector, they see this buy. And if the conservative way is, okay, I already see the buy signal, I don't want to jump in now. If it was to continue to go to the uptrend, that's when I would enter. And then people will put their buy stops above the high. So now you have your buy stop here, and you have your sell stop at the previous low, because we're now breaking outside of the zone. This gray area, this gray box is the zone. So now that we know that we're going above the zone and we can potentially go higher, this is where you can either utilize just the signal itself, or you can kind of customize the trade to see if it does want to go higher, where do I want to buy at? Naturally, the best places to buy is at the lowest point possible. So in this case, your lowest point possible was when it came back to the top of the zone. You had an entry here, and you had another entry here. And if you was to take either one of those entries, depending on where you got out at, or let's just say if you wanted to be the conservative trader and wait until it breaks, there's 15 pips. In most cases, being that this is the 1 minute chart, if you're on, especially if you're on funded accounts, all you really need is 10 pips. And we're going to go through the 10 pip strategy, utilizing the lower time frames. And as we start going on, I'll start next week, we're going to start trading live together. But I kind of wanted to get at least the people that are new, or the people that are coming in to use the tools, to understand it, so that we can all maximize these trade setups together. Because if the goal is to help everybody get funded, and then once we got a team, how many people up here? It's about 8 people up here. If we can all get funded and we all know how to utilize the tool, we may have one person that see it set up on EuroCAD, another person may see it set up on Euro NZD, even though the tool is going to give us all of the alerts, being that we have more people that are looking at the screen, depending on their level of experience, we may be able to catch multiple setups during our trading sessions. Because I could be talking about EuroCAD right now and seeing the setup, but then it can be a setup happening on GBP JPY that I don't necessarily see in real time. And if we have other people that are watching the charts, I'm gonna bring up some special guests as well. My brother Siobhan, he'll be here with us as well to help out. But as you guys can see, just even on this trade setup from yesterday, notice that 10 pip move that we caught. It was an easy 15 pips. If we have a funded account of $100,000, just to keep it even, $100,000 account, and you're doing a 2% risk on a 6 stop loss, you can use a standard lot size of 33, which is $330 a pip, and you caught 10 to 15 pips right here. Right down right here. That's over $3,000 in a matter of 30 minutes, maybe. That's a potential $3,000. Now, again, if we're using funded account size, or if you're lucky enough to have a real account with $100,000 in it, your 2% risk on that 6% stop loss is, I don't think it's 6%. I mean, 6 pips yet. Let me see. From this entry here is about 10 pips. So let's change this to 10 pips. You want to make sure we're doing this the right way. 10 pips, and you can use a standard lot size of 20, which is $200 a pip. And if you took this trade on a standard lot size of 20, I know it might sound crazy, but a $20 or $200 lot size is unheard of. But of course, if you have $100,000 account, you're able to do that. And that's an easy 14 pips. On about 14 pips, I'm putting my stop loss at least 10. So if it does pull back, I do get my goal. The goal is to catch 10 pips on these moves. We don't want to be sitting here, if we're doing live sessions, we don't want to sit here for hours and hours and we start at 6 o'clock and we still want a session until 1 o'clock. I mean, I will, but the people that have been on the team for a while know that we can be on these sessions for hours. But here we could be in a session, depending on this time of day it was. And by the time we take the trade, we'll be done in 30 minutes and you would have made about $2,000 off of that trade. But as we move forward, as we can see, it went even higher. So even if you was to just put your stop loss at your entry, if you had 2 trades going in, you got 1 trade. If you want to do 2 trades, instead of doing a 20 standard lot size or $200 a pip on 1 trade, if you want to break it down to 2, you're doing a 10 standard lot size, which is $100 a trade. So you got 1 trade that you closed out at your 10 pips. And then you have another trade that if you want to hold for the run, at least when it gets to 10, 20 pips, you put your stop loss at your entry. That way, if it does pull back, you're not losing any money. It came close to your entry, but your second trade ran up. So you could have caught your $2,000 off of your quick 10 pips on the first trade. But if you had a second trade and you held it, it went up 30 pips, which is another $3,000. So you ended up earning $5,000 on Euro CAD off of a minute chart setup. Not only did it happen once, twice, came all the way back down, gave you another entry right back out of the zone. So again, our main goal, we want to buy. We know we want to buy. We're noticing that the market is going up. Where do we want to buy? Do we want to buy? And a lot of people got the FOMO. They get the fear of missing out on a trade. And a lot of people are jumping into this buy because we got to remember on a higher time frame, these candles are starting to get painted to go up. We're seeing the move more real time because this is a minute chart. But I'm quite sure there were a lot of people that are starting to buy all in the area of the high. They didn't know it was going to be the high. But if we want to buy, do we want to buy here at the high or do we want to buy it at the low? So in many cases, if we're looking for a buy opportunity, if we had missed the entire setup, we seen the setup, I'm spending time with my kids or I was asleep or something was going on and I missed the entire setup. I see the move, I know we want to buy, but I missed my first initial 2 or 3 entries here. When I see and notice that it pulls back to the original zone, as long as it doesn't show that it wants to go below our previous lows, you gotta notice we got our previous lows here, is respecting it. As long as it doesn't go below the zone, we're still buying. It already bought, it already still going up. If it does come back into the zone, we're still looking for buys because that's the original trade for the session was a buy. Now, if it breaks below the zone and starts retesting, then of course we recalibrate and then we start looking for sell opportunities. But notice, as per the previous trade, this is our stop loss. If it goes below here, then we'll wait to see if it does want to break. If it never goes below our previous low, then we know we're still looking for buy opportunities if it does want to break back outside the zone. And that's exactly what happened. So you got your first trade, or second trade, you could have had 3 entries here, got to 10 pips. It came back to the zone here. When it breaks back above the zone, you caught another 10 pips. Same rules will apply. If you want to utilize this trade, your stop loss is still the same, which is previous low. So your stop loss is still this is another 10 pip trade. You can do a standard lot size of 20 for one, or you can break it down into 4. It's 5 standard lots for each one, or that's really up to the trader. Me, myself, I like to put at least 2 trades in. That way I can secure my 10 pips. And even if it does pull back and take me out on the second trade, it takes me out of my entry. I'm not losing any money, but I at least caught the 10 pips at a $10 10 standard lots. That's $100 a pip. I still made my $1,000. Even though I had 2 trades in, I made $1,000 off the 10 pips off the first trade. Even if the second trade does hit a stop loss, my stop loss is 10 pips. I'm back at break even. But if it doesn't hit the stop loss, if it's already up 10 pips on a minute chart, my stop loss is at my entry. So if it does pull back, I may have missed out on the second trade, but at least I caught the 10 pips on the first trade. So when it comes back into the zone and it hits my entry, it takes me out. Not only did it take me out the second trade, but it just, all it did was give me another entry. So I could have either held the entry or we could have started all over. I could put my 2 trades back in, both of them at 10 standard lots, which is $100 a pip. There's your 10 pips all over again. Not only 10 pips, I believe it went up 20 pips this time. It went up 20 pips from the entry, just about 20 pips. So now you made, if you're holding it, you got your 10 pips on the first trade, you closed out your 10 pips on your first. This is why it's great to have 2 trades, because once it gets to 10 pips, I'm closing out the first trade. The second trade is still running and never came back to my entry. The second trade, I caught 20 pips. So that's another $3,000 on EuroCAD. You done already made about $5,000 on EuroCAD previously, potentially from the moves from when the trade first started. But then you caught the retest. Here's another $1,000. You caught the retest again. Here's another $1,000, $2,000. Guess what happened again? It came to retest again. Here's another $1,000. It came to retest again. This zone is very, very important. A lot of people don't necessarily know that these zones are even exist and why they're so valuable. But as we can see, even on the minute chart, these zones are very important. Look at these retests. You had multiple ways to get into the market. 1, 2, 3, 4, 5, a potential 6. This one didn't come all the way to the zone, but that's a potential retest. If you didn't catch this one, you definitely caught this one. Now, so after all of these wins, you've been, every time it came, you're like, you hit again, another 10 pips. You're excited. Every time it comes to the zone, it's giving you 10 pips or more. Every time it gave you 10 pips or more, right? You're excited. Guess what happened? It came to the zone. Notice this trade right here. We would have took this buy. I mean, we've seen it happen. 1, 2, 3, 4. Every time it gets back, it's buying. Here's a potential loss. We've already 10 pips, 10, 20, 30 pips, potentially 40, 50. I mean, maybe 1 trade, 2 trades, 3 trades. Ultimately, you put your 10 pips, 4, 5, 6, 7, maybe 5 to 7 trades that you won. And then here's a potential loss, right? Because it came into the zone just like it did here. We got our previous lows. This is order block confirmations, all in the zone right here. Came back to the same zone, and then it broke above our green zone. So I would have ultimately, just like all of the other times, I would have confidently took this buy with my 10 pip stop loss, right? But notice it came, and if your stop loss was, like we said before, previous low, this is one of those trades we would have lost. Would have took an L. I would have took this L with a smile, especially if I caught 1, 2, 3, 4, 5, a potential 7 trade setups that gave me at least 10 pips, which is $7,000. If I lose 1,000, I'm still up $6,000. So I'm still in the clear. I still had an amazing day trading just EuroCAD on the minute chart and just the session key alone. We haven't even added. We're going to get into adding the golden key for double confirmations, even getting into adding the Pets entry optimizer to make sure that you're on the right side of the trend. But even if you did lose on the sell, notice what happened. You lost on the buy. Notice what happened. It gave you a sell. This is again a smaller time frame, so it didn't give you many retests like it did on the buy, but you got your sell out of the market. There's your retest. Again, on the minute chart, there's the retest right there. And it went lower. So now if we're taking this sell, if you want to take the sell and use a lower risk, you can ultimately take the sell and just use the stop loss from the signal itself, which is 30 pips. 30 pip stop loss on a trade is still not bad. I mean, it's a little bit more than what we were doing earlier. But even if you was to use the ultimate stop loss of 30 pips, it's still not a bad trade, especially if you can get 30 pips out of it or a potential 50 pip trade out of it. A 30 pip stop loss isn't bad. Now, do we want to minimize that? Of course. So even if we was taking that 30 pip stop loss, we use a standard lot of 6.6, and then we can just let it run. Or being that we're on a lower time frame, we don't necessarily have to stretch our stop loss all the way up here. All we have to do is find previous areas in the market. In this case, being that we're selling, we want to look at previous ceilings or areas of resistance, which is here. You had a nice area of resistance. It was stopping, and then it started to fall. So if we was taking this sell, then our stop loss will be right above previous high, which is here. So if I'm taking this sell out of the zone, now my stop loss is only 5 pips. So if my stop loss is only 5 pips, I can risk more on the trade. On this trade, I can do a standard lot size of 40, which is $400 a pip. That is unheard of. But if you have, of course, if you have a $100,000 account, it may sound extreme, but it's only 2%. You're only risking 2% with a 40 standard lot size, which is $400 a pip. And notice what happened. You caught at least, depending on where you got in at, could have got in here, could have got in somewhere here, could have got in somewhere here. You got small trend channels going in. Even if you wasn't get in on the initial sales signal, you caught 20 pips. If you held it, let it go, you caught at least 25 to 30 pips, and it kept going. I mean, this is almost 40 pips on a 40 standard lot size, $400 a pip. That's $16,000 on a minute chart trade setup. But of course, like I said, being that you're on a minute chart, you don't want to, when the market is giving you, especially if I'm on a 40 standard lot size, you can go to $1,000 and turn around. It'll be back at 300. So when you're using a higher lot size like that, I suggest anyway, you'll break it down into multiple trades. That way you can hold, you can get your 10 pips. As soon as it hit 10 pips, you out the trade. You're on a 40 standard lot size. If you're doing 2 trades, you're doing a 20 standard lot size, which is $200 a pip. So as soon as the first trade gets to $2,000, I'm taking that $2,000. I'm not allowing it to come back to $1,000. So I'm at least secure 10 pips. If you're using a minute chart or a lower time frame, secure your 10 pips. Now, if you got multiple trades going in, so of course, the first trade, you secured your 10 pips, you closed out the market, and then you put your stop loss at your entry, which is this line here. So if it does pull back, at least you're not losing no money on the second trade. You caught your $2,000 on the first trade. You can be done for the day. $2,000 a day on a $100,000 account is amazing, especially if you're doing it off a 1 minute chart with a 5 pip stop loss. But if you did hold the second trade, you got the second trade running, it never came back to your stop loss. It just kept on going. Now, this is when, as a trader, risk management, you have to kind of customize it as it goes. So if you want to start securing profits, you just like you had your stop loss at previous high, when it starts moving down further and further in the profit, if you want to put your stop loss at the previous high or secure even more pips and put the stop loss at the previous low where it breaks, then of course, when it comes back, it's going to take you out the trade. But you caught at least 20 pips on the second trade. So you caught 10 pips on the first trade, 20 pips on the second trade. That's $6,000 on EuroCAD. You just made $6,000 previously earlier on all of the buys. And then once you caught that one little loss here, you caught your one little loss, you might have lost $1,000, but then when the sales started kicking in, depending on what account size you use, of course, I'm just using from the $100,000 funded account, right? But if you're using a $100,000 funded account, you might have lost $1,000 on that one little buy setup that didn't do as it did previous, but then you made your money back times 6 on the sales. And this happens all of the time, every single day. Is it as clean as this? Now, this is another thing that we want to pay attention to. So notice we caught a buy. Notice the buy signal came in. We caught the buy setups. And notice it's not going to tell you. I'm trying to get the programmer. We're going to see if we can get the programmer to implement re-entries off of the zone. So if we get a right now, it only tells you to buy once, and then it tells you to sell once. After that, it can be breaking above the zone, breaking below the zone, and it won't even tell you which way to trade. I'm gonna try to get the program to see if he can implement the re-entry. So if it's already in a buy, you would get a green re-entry here. You will get a green re-entry here, so forth. But for now, manually, we will have to do it manually. So if we're already seeing that it's already bought above the zone, it's already had a potential of going above the zone, it's already sold below the zone. When it comes back to the zone, we got to naturally know what to do. So even in this trade here, again, like I was saying before, if we want to sell because it's in sellers, oh God, how did I do that? How do I undo that? Give me a second, you guys.
Hey, Aaron.
Yes, ma'am.
Go up in that top right corner, a little bit lower to the left a little lower. No,
Over
right.
here.
See that
Oh,
over to the
okay.
right, that little blue. Yeah, the
There
little
we
blue
go.
box.
Thank you, Kristen.
Yep.
Thank you, thank you, thank you. It's always good to have a chartologist in the room. That was crazy. I didn't even know how I did that. But thank you, Kristen. Let me see. So if we are naturally, we were selling. We're selling. Where do we want to sell? Do we want to sell? People are starting to sell here. Everybody's selling because they're scared of missing the move. We see the zone. We know where we could have gotten that early in the game, right? But if we want to sell, where should we sell at? The low or sell from the high? Naturally, if we want to sell it from the highest price possible. So when we see that it's in seller's territory, we see that it's selling, the best places to sell is when you get back to the zone. Now you can ultimately sell from the bottom of the zone. I've seen times where it'll come all the way back to the top of the zone or the daily high, and then it'll retrace and drop again. But in this case, we noticed that it came into the zone. I personally will probably have taken this sale. I personally would have probably taken this sale just off the retest. Here's another potential losing trade, right? But once I noticed that it's going above the zone, now if I do take this sale, is what, 10 pips, 10, 15 pips? It ultimately at the most 30 pips. So if I did take the sale, I lost on the trade. But as we're going higher, now this is all on the trader, this is on experience, you're back testing, using and getting to understand these actual tool with the session key tool and the golden key tool. But notice it never sold, it never came back below the zone. So if it's not coming back below the zone, the only other option is for it to go above the zone, which is what ultimately it did. But do I want to buy from the high or should I buy from the low? So it'll be some cases just as a trader from trader experience and learning these tools. And as we do these in a lot of sessions, you'll see there'll be cases to where if this sale did not work out in our favor, this could potentially be going into buyer's territory. Do we want to wait for it to buy from the high? We already seen it buying from the high. We've already seen it break above and buy and go all the way up in these areas. So if we're looking for a buy, where should we buy from? The high, or should we buy from the low? So in these cases, in some cases, not going to happen all of the time, but there'll be cases where you'll have to make the right judgment on which side of the trade that you're naturally looking for if you're trying to get the optimal entry of a buy, even though it hasn't broke currently here in this space, it hasn't broken above the zone yet. If we're still sitting right here, it hasn't broken above the zone yet, but we've noticed that at one point in time, it was above the zone and they already gave us our 10, 20, 30 pips to the upside. Where should we buy it? Should we wait for it to break? That's the conservative. That's one way of doing it. We wait for it to break and then wait for it to retest. And then we can buy from here, from the high, or we can risk a lot less and buy from the low. So if we're looking for a potential buy setup, because we're noticing now that it didn't respect the zone and start selling, it's starting to go higher and higher. What if this trade does want to go back above the zone like it did previously? So if we're anticipating a potential buy, I would, me personally, if I was to buy it from here, from the low of the zone, where's my stop loss? I can do my stop loss right below the actual zone itself. So if I want to do a higher risk trade, this is not going against the system or going against the actual tool itself. But if I'm anticipating that market may go back above my my session key tool, I don't want to wait for it to break and then wait for it to retest. If I'm anticipating the market to go up, I can take this buy from the low of the zone. If you want to buy, it's either you're buying from the break of the zone and it comes back to retest and you're buying again from the break of the zone. But if you want to buy, the ultimate entry is buying it from the low of the zone. And there's going to be cases.
Come here, Fred.
Hello? There's going to be cases to where you're going to get a buy, it's going to come out of the zone and it's going to come all the way back in the zone and stop at the very bottom of the zone, never come back below the zone. And then you will get these optimal entries to buy at the low of the zone. Stop loss. The stop loss is, what is that? Like a 3-pip stop loss? 3-pip stop loss. So seeing this is a higher risk trade based off of the tool itself. The tool didn't naturally tell you to buy, but you can risk with a 3-pip stop loss. I can do that with my eyes closed. I'll do that trade with my eyes closed. It's only 3 pips. If I'm wrong, I'm wrong. All I lost was 3 pips, and it's up to you to decide how much you're willing to risk on that trade. A 3-pip stop loss, you can trade a 66.6, which is $660 a trade if you wanted to, or you can just do it if you want to. You don't have to necessarily risk 2% on every single trade. You don't. If you're seeing the tool is giving you a buy and it's 100% a buy setup, you believe in the setup, you've seen the retest, everything, all of the confirmations lining up, then you can risk the 2%. But in this case, this is more so of a trader's option on deciding, do they want to wait for it to break above the zone, or can I take this buy from the low? And if I am, I don't have to risk 2%. I can risk 0.5 or 0.1% or 0.5% or 1%, just because I'm doing this on my own. This is more of a manual trade. I'm still using the zone, but it's just more of a manual decision to take this buy before it gets above the zone, because you want to, this is the buyer's area above the zone. Do you want to buy from the high, or do you want to buy from the low? So when it started coming up, I can naturally take this buy from the low with a small 3-pip stop loss. And then notice, after this buy from the low, depending on where you got in at, as soon as it gets to the top of the zone, you're done with the trade. Isn't that 16 pips? You're done with the trade before it even gets out of the zone, because you bought it from the low of the zone. Or you can just hold it and wait, and you could have caught 25 to 30 pips to the upside. It's about 35 pips to the upside. It breaks out of the zone. Notice here again, you came back into the zone, you wait for a break. Here's the break out of the zone. Now, if we get in these, you're noticing these breaks out of the zone, this is probably end of the day, it's starting to stall. Look at all of these retests from the zone. This is a minute chart again. So if you're taking these breaks outside of the zone, you've already, if you were an optimal trader, you already done with the trade. Now you're just waiting for the re-break. You catch a re-break, even if you took this retest into the zone and then it breaks back above the zone, this is your buy. This is your buy. So even though it didn't tell us to buy, this is the manual way of using the trade or the tool. This is your buy, and your stop loss can either be below the zone. You can keep it original. You're going to risk more than there's about 20 pip stop loss, or you can utilize previous lows, which is here in this area. Previous, where we buying at? We're buying here, yeah. So previous low in this area, right? So notice it, even if it did break, and unfortunately, this one trade, it did come to hit that. And that's even if you did take the loss, that's 10 pips, 15 pip loss, right? Because it did come one time. But as we can see, it broke above again. So even if I take the L, the setup wasn't ready yet, I took the L, I get another setup. I got another setup. Now my previous low is here, so my stop loss can be protected. I'll move it down just a little bit. We got impulse moves. This is where your technicals come into play. You got your impulse moves, you got your flag pattern. You wait for the break of the flag. It breaks the flag, comes back, retests. I mean, it's retesting all day, bouncing around, and then it gave you your 10 pips that you were looking for. That's about 27 pips right there. You guys give me 1 second. I'll be right back. Apologize, you guys. My apologies. I heard my daughter crying. I had to run upstairs real quick. But yeah, notice we had the buy set up and it kind of stalled for a while, but we ended up getting our 20 to 30 pips to the upside. It stalled for a minute, but it was a clean trade. Multiple setups, multiple entries, 1, 2 entries, another entry here, another entry here. And if you want to take multiple entries, or if you just missed the entry, it gave you multiple opportunities to get into this buy, and then you caught your easy 10 to 20 pips. On a minute chart, I'm not looking for more than 20 to 30 pips. If it gets once it gets to 10, I'm already closing out the first trade. The second trade, I'm gonna just let it run and kind of trail the market a little bit, but I'm going to be securing profits as it moves. Notice again, we got another small pullback. Even if it doesn't naturally come to the actual zone itself, this is where the technicals will come into play. You're noticing the pullback. We want to buy. Do we want to buy now? This is one of those cases to where we want to buy, but I don't want to buy it all the way up here. I'm noticing it's still bouncing in this area. I don't want to buy it all the way up here. Where do I want to buy it at? Back at the zone. Now, is it going to come all the way to the low of the zone? In some cases, it will. Some cases, it might just come back to the top of the zone. Here, it never came inside of the zone, but it still gave us a good enough indication that it was a retest. And if it doesn't come in the zone, if you want to utilize technicals, you just, being that this is a small downtrend, you wait for structure to be broken. You got your breakup structure. And this, like I said, this is a minute chart, technicals and all of this stuff, price action and all of that stuff. Same rules apply, whether it's a high time frame or a low time frame. Notice you got your trend channel, you got the break of the trend, and then you got the retest of the trend channel on the minute chart. So the technicals and the way that the market moves, of course, being that it's on a minute chart, is moving faster, so you're not going to get a 100-pip move in 10 minutes. But as far as the market structure and the way that the technicals work in price action, the same rules apply on all time frames. You can go to a second chart and find a trend channel break and retest on a second chart. For my Pro Plus Trading View owners out there, you can go down all the way down to the second chart. And there have been times so I would go down to the second chart to find entries. We'll get into that in the trading session. This is Euro CAD. Let's go to I want to show you guys a trick. If you already have the session key and you have the golden key, let's go to a higher time frame. You can naturally find multiple setups. Where we at? You can find multiple setups and multiple confirmations using both zones. Now, if you got both of them on the chart, it may look confusing at first, but all you got to notice is this zone right here, this gray transparent zone is our session key zone. And then the gold box is our golden key zone. The gold box, notice here, is more cleaner. So you got your gray zone, that's your session key. Your golden zone is smaller. So you can find a better risk to reward using the golden key zone. So notice here on that buy, remember that buy that we was catching on EuroCAD when it first happened, you caught the buy from the golden key first. The buy from the golden key came first on the 15 minutes chart. And then you caught a buy on the second key, the session key later. And just off of that trade, there's your 10 pips, 10 to 20 pips to the upside. But you caught it early because of the golden key tool. So it's give or take. It's not going to be clean every single time to where it's going to be buy, sell, sell. Notice here you put a sell first on the golden key and it was invalid, but then it gave you the buy. And then you got the confirmation of the buy from the session key. So you know you're on the right side of the trade. Let's see. Let's go to another pair. I'm kind of run through these pairs. Let's take the golden key off. I just want to kind of briefly show you guys that. I don't want to confuse you. We're going to get into that in later sessions. But for those that are already using the session key and golden key, is over the weekend kind of back test it, because you can definitely use the golden key and the session key together, but that's only on the Forex pairs. The session key, unfortunately, doesn't work on your metals and gold, silver, platinum, or your indices. Only the golden key does. But as far as the Forex pairs, you can definitely use both of them on the chart, just for added confirmation. So here we got Euro USD. This is a new channel. So what I do is notice that as this zone is being created, I will wait for the initial break. Right now it's 6 o'clock. The zone is being created. As soon as you get a break, I would just scan to see which trades. Now we have a trade here on Euro NZD. It is at the top of the zone. This is a scary trade though. You got an impulsive move. It's kind of a trend channel here. It may stop at this top and come back down. A little small in pattern here. Who knows? I mean, it's not like we have a crystal ball. We know exactly where the market is going. But all I would do is, now that the zone is created, I would briefly scan through to see which pairs is close to the zone. Me, myself, personally, this is my hit list. I got this is all, I mean, everything is on the hit list because the session key, golden key, and perfect entry optimizer, you can find setups on almost anything market. Right now, I'm on a 15-minute chart. So if I was to look for an entry in real time, right now, I will go down to a minute chart. Notice here, on a minute chart, we're getting a break on GU. If we wanted to take this sell on GU for this break to the downside, ultimately your stop loss is about 20 pips or 10 pips above, about 30 pips on this sell. And this is real time. If you want to lower the chances of you risking 30 pips, then where would your stop losses be at? You have previous high areas. You got a previous high, ultimate high here. You can use that stop as your stop loss. If you was to break here and we get a break from here above that stop loss, that's about a 5 pip stop loss trade. Or you can utilize here as your stop loss. That way you're lowering your risk. You don't have to risk the full 30 pips. You can risk 15. Or you can risk 5. That's all depending on the trader. Or ultimately you could put 3 trades in. The third, you got one trade that's risking 5 pips, one trade risking 15 pips, and one trade risking, that's totally up to the trader. Me, myself, mainly I usually put 2 trades in. So I can at least get my 10 pips out of the first one. And then the second one, I'll try to trail the market as much as I can. And this is all I really do on the session key. I will wait for the break of the zone, and I just kind of scan through the pairs. Notice GA is in the zone, it's consolidating. I wouldn't even pay no attention to it. Notice here, we got a break on GCAD. So the first thing we do, you can initially get in as soon as it breaks. You don't have to wait for the signal if you don't want. You can get in as soon as it. This is for the technical traders out there that want to kind of take their trading into their own hands. You don't have to wait for the tool. As soon as this breaks, I utilize the stop loss at previous high, which is here, or the ultimate high, which is up here. So if you use the ultimate high as your stop loss, it's only 20 pips. We're still on a minute chart. If you're using previous high, it's 15 pips. So if I was to take this trade, I can take it now. Or conservative, you wait for the break, you wait for the retest, and let the market tell you that it wants to go lower. Because the market is going to tell you, okay, I broke this zone. We got a daily high. We're going to go lower for the next few hours. And when it retests, it'll tell you, it'll let you know if it's going to go lower. Because if it retests and it don't go back into the zone, it has no choice but to go lower. Now, in this case, if I was to take the sell and it comes back into the zone, as long as it's not coming above previous areas of support or resistance, here, see, you got the sell signal coming in on this minute chart. And this is in real time. So if you want to just test it out on demo, we can, right? This is a sell coming in. This is the previous low, which was the previous floor. You can use that as an area of resistance. So if I'm taking this sell, as long as it stays below the zone, I know I'm in profit. As long if it does pull back and it stays below this area, I'm still in the trade. If it goes above this zone and it comes back to my ultimate stop loss is here, so I got to find other areas of resistance. Here's another area of resistance there. There's another area of resistance here. So as I'm watching the trade, I wanted to, if it goes straight into profit, it's an excellent trade. It doesn't happen like that all of the time though. So I'll watch it, and if it does pull back into the zone, it's already showing me that it wants to sell. Now, the higher time frame, the more confirmation this small break would be. But being that we're on the lower time frame, this could be a fake out. We don't know. So if it does go lower, we're good. But if it does come back into the zone, as long as it respects this first line, I'm still not worried about it pulling back and hitting my ultimate stop loss, which is this line right here. This is my ultimate stop loss. this yellow line. So right now we're in the clear. We could potentially be in profit as we speak. So if I'm watching this trade and we're going further and further into profit, all I'm looking for is 10 pips. Right now is about 3 pips in profit. All I'm looking for is 10 pips. If it pulls back to the zone and it respects the bottom of the zone, I know I'm in the clear, and it will continue to go further down. It has no choice. But if it's not going into the zone, it has to go back down from the zone. But if it does go to the zone, as long as it's still below my areas of resistance, then I'm not worried about this trade hitting my ultimate stop loss, which is only 15 pips, 13 pips. So this is a trade live. I wasn't anticipating trading live. I just kind of wanted to go over it with you guys, but these will be the way our sessions go as I'm teaching new people coming in, and we're sharpening our skill set. Then we may have setups just like this. At 6:58 p.m. Eastern time, we can get it set up and catch 10 quick pips, and we can be done. That's how I anticipate our trade sessions to going. I don't want to hold you guys long, but I wanted to be able to at least teach, train, ask questions. And if we can get 10, 15, 20 pips on potential setups while doing so, then it's a win-win. So that's mainly how I look for the setups. Notice here, we already had a break on GJ. Potential sell. So if we was taking this sell on GJ, what do you guys think? My ultimate stop loss, of course. Hello? Somebody had a question? Our ultimate stop loss, of course, is above the zone, or the initial stop loss from the signal, which is 10 pips above the zone. Or if we wanted to lower the risk, we can start finding areas of resistance. Here's our area, our ultimate area of resistance. You can use here, the high, you can use here, you can use here. That's really up to the trader. I will go ahead and just pick right here. That's my ultimate stop loss. That way I can kind of lower my risk a little bit on this trade. I can either risk more on my lot size, or ultimately I would just, instead of losing $500 on a, because again, we're going on a high lot size. So a $500 loss on a $100,000 account, you can take that with a bat and a eye and not even worry about it. It's only $500, $1,000, $500 stop loss. How much is that? I'm good at math, but I ain't gonna do that today. But let's see. The stop loss is 15 pips. So if I'm doing a 10 standard lot at 15 pips, that's $1,500. Ultimately, I can lose on this trade. $1,500 that's 1.5% of your account balance, which is not a bad trade. So instead of doing a 15 on one trade, if I wanted to lower my risk to where I can catch it from here, if I want to take this sell and I lower my risk to where my stop loss is at this previous high here, I'm catching the sell from here. This is the previous high. We're seeing this area of support, area of resistance. Now I lowered the risk even more. Now it's only 7 pips, which means I can either risk more and still lose my $1,500 and potentially make more money because I will have a higher standard lot size, or being that it's 7 pips instead of 15 pips, instead of me losing $1,500 on a $100,000 account, I will only lose $750. I've lowered my risk by utilizing previous areas of support and resistance. I know that we're selling below the zone. Ultimately, stop loss is above the zone. So even if it does come into the zone and start playing around, it may come all the way back out of the zone and continue selling. So if you want to utilize the zone, the ultimate stop loss above the zone, that'll give you the clear and allow the trade to move in the right direction. Where's the direction? Right now, it's telling us it wants to sell because it's below our zone. If it comes back into the zone, then it may decide to go above the zone. In that case, this sell, if we didn't get our 10 pips, this sell is invalid. And then we're going to start looking for buy opportunities. But as of right now, GJ, we're looking for selling opportunities. Where do we want to sell at? You can either sell from the bottom of the zone, or ultimately, if it's selling and it comes all the way back here, mainly when it comes back to the zone, people are looking for, they're going to look for the buy. Me, on the other hand, if it's been selling and it comes all the way back to this zone, I'm gonna see if I can find one shortly. If it comes all the way back to the zone, I'm gonna sell from the high. I don't want to sell from the low. I want to sell from the high. And if I sold from up here, my stop loss will probably be only 5 pips. If you're buying from up here, your stop loss is 40 pips. So I would take the lesser of the two evils. If I'm seeing that this is already selling, let me see if I can find one for you guys real quick. Hold on. So you guys know exactly what I'm talking about. Let's see if we can find one real quick. And then here goes one right here. All right. That in GBP CAD, wasn't that the trade we was looking at earlier? Wasn't that the trade? Was that the trade we was looking at? I believe it was. Let's see. There you go. Your sale is in profit. Was it? I think it was GBP CAD. Mistake me if I'm wrong. I believe it was GBP CAD we was looking at on a minute chart. Yeah, it was. So notice we got in early on a minute chart, and then we got the signal coming in. This is, I believe this is, let's see. It should be on the hour chart. GBP CAD. Oh no, that's just an alert. That was a 3-minute alert letting me know that on a 3-minute, because that's what I will do if I'm watching the chart on a minute. Luckily, we saw it in real time on a minute chart, but I'll put like a 3-minute alert on all of the pairs. So when I do get this alert, I'm looking at it, I'm noticing GBP CAD just broke on a 3-minute time frame. So I can pull up GBP CAD and find my entry. I don't have to wait for the hour signal. The signals that's coming in the chat is based off of an hour time frame. But if I want to get in early, this is my 3 minutes. We got in early on a minute chart, but it's already hit 5 pips, 6 pips to the downside on GBP CAD. Let's go back to where we were. I believe it was GJ. Let's go back to the 15-minute. GJ, where's the market at? Where was it? All right. Right here in this area, you guys noticed that we had an initial buy and hit the take profit one, right? Gave you 25 pips or 10 pips, depending on the time frame. Initial buy. We know that we can go in high buyer's territory. It also gave you a sale. It gave you 10 pips. But what I want you guys to be aware of, in some cases, just like I was saying before, if you're buying, notice here we're buying. It came out the zone. We're buying. Best case scenario, we want to buy it from the low. Or, I mean, you can wait until it buys from the high, but the optimal entry to lower your risk is to buy it from the low. So when I'm buying, I'm seeing this buying, and you're getting all of these candles pulling down. People are selling this market. I don't know why. The technicals will tell you that it's buying. This ain't nothing but a flag, but there's a lot of people that were selling in this market. They're seeing these big red candles starting to come into play. They're selling all in these candles. They're selling. Me, I would have seen this and seen it coming back down if I had caught it on a lower time frame. Let's see if we can get to a lower time frame. Hold on. Let's do the replay. Go to the 5-minute. It may not even do it on the 5. Let's see if we can get it on the 3. You probably ain't gonna get it either. But we're buying. I know we're buying. We're buying. Do I want to buy? I'm seeing this huge move. I missed the move. Dang, I was supposed to buy it out the zone. I missed it. It's all the way up here. People are trying to find their way in the market. They're buying at the high. You're not supposed to buy at the high. You're supposed to buy at the low. Where's your low point? The zone. Your zone is your low point. In some cases, it'll come back into the zone and you can buy it back out the zone. There's your 10 pips there. Or you can see is it going to pull back? I don't think it pulled back to the bottom here. Let's see. It didn't. Or maybe it did. But as you, oh, there you go. There you go, right there. There it is. So initially we seeing the buy, we know we want to buy, but we went with the fear of missing out, and we know we want to get into this buy. Even if we had started catching the buys from the initial buy that happened first, and then we started catching sales from the initial sale, we might have been asleep during this time. Say for instance, this might have been London. We're asleep. We missed it. I'm like, dang, we missed another buy setup. I could have caught this buy. And then we're going into New York session. I'm just being hypothetical. I don't know what time this was during this trade, but notice here, we're back. It's about maybe 11 p.m. or 11 a.m., something like that. You're looking at the chart and you're noticing that it was buying. You missed the buy, but now it's back into the zone. Where do we want to buy at? Do we want to buy all the way up here? Do we want to wait for people to say, oh, you got your break, wait for the retest, and then you put your buy stop at previous high? There's a whole bunch of people that's waiting for the break all the way up here before they buy. Do you want to naturally, that's retail trading. You're not supposed to buy at the high of the market. If I'm buying the price of an asset, I want to buy it at the lowest price possible. So now that I'm seeing that it's buying, I have to wait for the market to give me the best entry possible. And that's where the session key or the golden key is going to come into play, because you can either going to buy from the zone. It came back into the zone, breaks back above the zone. You got the 10 pips right there. Back into the zone, back above the zone, another 20 pips right there. You can use these because it may never come to the bottom of the zone. Some cases, it will come to the bottom of the zone. Now, if people are not using the zone, there's a lot of people that are selling the break. They see these lows, they see lows, they see lows, they see lows. They're selling. They're selling. They don't even have no idea that this is a very important zone. And we were at one point in time buying out the zone. Do we want to buy when it gets, do we want to sell all the way down here? If you want to sell, what are we supposed to sell at? The highs, the highs, the highs. You sell from the high, you're supposed to buy from the low. So we use the session key to give us a good indication of where we should buy at. We already seen that it's been buying for, that's a great move to the upside. This is nothing but a retracement. This is nothing but a pullback. This is nothing but an impulse into a flag pattern. There's your break and retest, break and retest. Pull it a little bit lower. Should break and retest of the flag. Break, retest. We're starting to go back into buyer's territory. Where do we want to buy it though? You can buy it from the top of the zone, or you can buy from the bottom of the zone. So even if you start seeing this, you're looking for a buy, even if you're in a buy, naturally, if you're in a buy, where's your stop loss? 10 pips below your zone. So even if you're in a buy and you're starting to see this heavy push, heavy bearish movement to the downside, don't start sweating, don't get scared, don't start hedging your trades and starting losing belief, and you're closing out the buy and now you're jumping into a sell. That is the worst thing you could do. If you're seeing this, you can double up on the trade, still have confidence in yourself, confidence in the market, and the technicals is already telling you that this zone is very important. It bought above the zone. It is now back in the zone. As long as it don't go below the zone, I don't care where it is in the zone. I'm looking for buys, because that's what we're doing. We're buying out the zone. Now, if we were selling out the zone, all I'm looking for is for sale. So here's one of those cases to where we could have lost. It's selling out the zone. I'm looking for all sell opportunities, all sell opportunities. Here's the sell opportunity that I lost. Is it going to be 100%? Of course not, right? But after I lost on this selling opportunity, didn't I have a chance to get my money right back on the buy? If I missed the buy, I know we're buying now. We're not selling no more because we didn't go. We're not below the zone. We're above the zone. So now that we're back in the zone, I'm still looking for the initial continuation of the buy out of the zone. Where do I buy? Ultimately, you want to see if it comes all the way back to the bottom of the zone. If you can get it all the way back to the bottom of the zone, you can do a 1 pip, 2, 3, 5 pip stop loss. I've had trades on a second chart, 5-second chart, 15-second chart, where it came down to the bottom of the zone. I entered the trade and it went straight into profit and never came back, because the zone is so much smaller on the lower time frames. If it comes to the bottom of the zone and you're buying from here, it never came back. If it does, it'll go below the zone, hit your stop loss is what, 3 pips? So you can take the buy from the high. That's ordinarily you would catch the break from if you're buying outside the zone. Your ordinary entry is when it breaks back above. That's your entry here. You got entries here. You got another entry there. You got another entry here, another entry there. And then you got the ultimate entry here. So your first entry, you could have caught 10 pips. Got an entry here, entry here. By the time it gets up here, you caught your 10 pips, 20 pips to the upside. So if you caught the entry here, you've seen it retest, you put in another entry. You got another trend line going on over here. You got the break of the trend line. You got another entry. So you got multiple entries already in. It gave you your 20 pips. You're done. You got a trade here. Came back into the zone. Oh, I'm lucky. I got a whole nother. I didn't already closed out 30, 40 pips on multiple entries. It came back into the zone. Gave me another entry for another 20 pips. Another entry for another 10. All you're looking for is 10 pips. If you're using a $100,000 lot and you're using standard lots like this on a funded account, all you're looking for is 10 pip moves. 10 pip moves. This is an ultimate trade because you got it at the ultimate low. It's coming at the ultimate low. I would have probably took it somewhere out of here. It's another 20 pips to the upside. Or you could have just waited till it broke above again and caught your 10 to 15 pips. But those are those situations to where you got to kind of manually decide. I know that it's in bias territory. It's giving me another entry. Unfortunately, right now, the tool is not going to tell you to re-enter, but you're already seeing the setup. You already back tested it. You already know how to maximize this tool in lower time frames. Where do I buy at? Ultimately, I want to buy it at the lowest price possible. Let's see if we can find another indication. Let's do a quick scan real quick, see where the markets is at. See if we can find another setup. Let's see. I'm liking this just from technicals. I'm anticipating a sell in Euro AUD just for what it looks like. This is a reverse or an upside down shoe wedge pattern. I don't know if you guys can see that, but you had an ultimate impulse move to the upside. You had your flag. The flag never broke previous high. You got your order blocks all in this area. That's where the smart money is, all in here. Came back to retest it. This is now not using the session key or the golden key. This would be a zone I would pay attention to on Euro AUD, just based off of technicals. You got an impulse move to the upside, and it's coming. It looks like a reversed shoe wedge pattern. I don't know if there's another name for that, but it impulsed, and then it's giving you this triangular ascending channel. So I will put a trend line here and anticipate the break of Euro AUD. So when you start using the technicals, it's already breaking on Euro AUD. Even if you're unsure, you're supposed to believe in your gut, especially if you kind of understand the technicals and understand price action and how the market structure is. But even if you're still second guessing and you're unsure, then just wait for the sale to come from the session key. I'm on a 3 minute. Let's go down to the 1 minute. Show y'all what it looks like on the 5, 15 second. Same rules will still apply. You can wait for it to break on the 15 second. You can go to the 5 second. Notice here on the 5 second chart, the zone is still the same as the high. There's still 19, 20 pips. So if I go to 15 minutes, the zone is now 25 pips. I'm going to the 1 hour chart. Your zone is 40 pips. So the lower time frame, the smaller the zone. So if I'm on a 5 second chart, this is the zone that I have to pay attention to. So if I'm anticipating a sell, but I'm unsure if it's going to sell or not, I'll just wait for it to break below the zone on a lower time frame. Notice we're on a 5 second chart. We can get in with 5 seconds, it'll break, and then within 10 minutes, the signal will come from the 15-minute chart, or the signal might come from the 1 minute and 3 minute chart, but you got in on the 5 second chart, so you got in super early. You got in on ultimate entry. Now, if it breaks below and then it comes back into the zone and it comes to the top of the zone, then you know that you can sell ultimately from the high. Which trade is this? Oh, we didn't trade it. Let's go back to the trade that we was looking at. I believe it was GBP CAD. Let's see where it's at right now. So now notice GBP CAD is giving us a sell on a 15-minute chart. Did it give us a sell on the hour yet? It hasn't even broken on the hour chart yet. That's why this is kind of looking like Euro, the other one we was looking at. We got an end pattern. I'm definitely expecting this to keep going down. But notice it hasn't given us a signal on the hour. So we don't have the signal coming in the signal channel yet, but we already got the signal starting to come in on a 15-minute, which means you can get in early, or the 5-minute. Here's your first break. Came into the zone, gave you a nice wick, closed back outside of the zone, came back to the zone. You got a nice retest going on the 5-minute. So if you missed the initial sell signal, you got to retest. I don't like this setup. This is looking like a shoe wedge pattern here, setting up for a pullback. But right now, we're still under the zone. So we're still looking for sales. Even if this was a shoe wedge pattern and it does pull back, we're still ultimately looking for sales because it came below the zone. Now, if it does come back into the zone, here's our points of interest for resistance. Ultimately, our stop loss is only 15 pips, is here. The original stop loss is, of course, above the zone, way up here. So as long as it respects these areas, I'm still looking good. You're still looking good for a sale. Now, if it starts to come and it starts breaking this yellow line and then it goes above and closes above the zone, then we can sweat a little bit. We're still in the trade though if you use the ultimate stop loss. You can sweat a little bit if it's getting up here, but you'll know even if it does hit my stop loss and it comes back down and retrace, I'm gonna get my money back on the buy. But as of right now, GBP CAD, the only thing I'm looking for is sell opportunities. It don't say buy nowhere on the chart. We're looking for sell opportunities. Now, this is a 3-minute chart. If this was an hour time frame setup, you caught the break on the hour, then it pulled back 20 pips on you, and this was an hour setup because same rules apply on all time frames. Notice you got your retest, 20 pips, retest, 20 pips. If this was an hour time frame, unfortunately, it's not. It's on a 3-minute, but notice even on a 3-minute time frame, you got your break, retest, outside the zone. Being that is a lower time frame, you're not going to get as much pips as an hour, but it's 3 pips. Came back, gave you another 3 pips, right? Even if you was using a $100,000 account and you caught 3 pips, if your stop loss is 15, and say for instance you're using a normal 10 standard lots, that's $100 a pip, 3 pips, and this one 3-minute candle, you up $400. You can close the trade if you want to. Right? You don't have to necessarily go for the entire 3 pips. I know when I first started using funded accounts and started realizing that these high lot sizes is still proper risk management, and I was taking standard lot sizes of 10 standard lots on a trade, and then the trade goes to $500 within minutes, I found myself closing the trade. I'm like, man, that's at $500. I'm taking that 5 and I'm leaving it alone, right? And that's still a smart thing to do. It's $500. If you make $500 a day, and there's 20 to 21 trading days, right? That's 10 grand a month. If you're using a $100,000 account, and if of course using proper risk management, and we got to factor in that you're winning $500 every single day, like you're not losing no days. That's rare. Like I mean, there's been times where you can go on a very good run, especially using these tools. But $500 a day, $500 tomorrow, $1,000 a day. You don't take no losing days. I have losing days. That's because me just trading more than I should, right? But if you naturally just caught that $500 in 3 minutes, you could be done for the day. I don't want to go too, because some of you guys may know I'm long-winded, but if you guys have any questions, feel free to chime in. I'm gonna check the chat. I usually don't check the chat. Let me check the chat real quick. Someone asked whether it's a buy or sell. Do we enter on the signal or once the signal candle closes? Great question. Initially, say for instance here, this candle here, it came down, it may have closed, it may have told you to sell, but then it came back above the zone and closed above the zone. That is the only time it repaints, if it's still currently painting that 3-minute candle. But once the 3-minute candle closes and the sell is still there, that's when you can take the sell. Now, or you can wait for, initially wait for the retest and get it at a higher. So even in this case, some people would have seen the sell If you took the sell signal by itself, you're selling here. This is where you'll be selling at on the very next candle. You would have sold, it would have pulled back to the zone. So I want you guys to just realize when you're using these tools, and this goes for the golden key tool as well. This is mainly the session key tool because we're going over Forex. But if it gives you the signal, rarely will it give you the sell, and then the very next candle goes 10, 20, and it goes straight into profit. Sometimes that does happen. If you miss that run, it's cool. You'll catch another one. But I don't want you guys to get discouraged when you get this sell signal and then it pulls back into the zone, and then this is only about what, 6 pips in drawdown. So it's not like you're sweating bullets. But instead of selling it here, where should we sell? Again, if we're selling, we want to sell at the highest point possible. And the highest point possible is either if it pulls back to the zone initially here, and then you catch the sell from here, straight into profit, or another sell from here, straight into profit. Or if we're selling, it's been selling for a while, and you notice that it's giving you at least 10 to 20 pips on the downside, and then it pulls all the way up to the top of the zone, you want to sell from here. Now, it may buy, retest, and then you'll get your money back and buy. But if you can get this sell, and this sell runs 20 pips to the downside, and then it lingers its way, and market just slowly creeps its way all the way back up to up here, and you sell from here, you call it, I call it the optimal entry. That's the optimal entry. These entries down here, you probably could have caught 20 pips or so, and then you'll catch a trade. It'll come all the way up here. Retail traders, when it gets up here, they're starting to buy. They're buying. They're buying. They're buying. Who are they buying it from? The smart money. The smart money is selling. They're selling from the high. You're supposed to sell from the high. This is the high of the zone. So it's already selling. It's already selling, and then it pulls all the way back up here, and it starts rejecting. You're starting to see wicks come up, then it's closing back in the zone. Wicks come up, back in the zone. Oh, this is the high. You want to sell from all the way up here, and I've seen cases where you can catch this sell from all the way up here. It'll come all the way back down, break the bottom of the zone, catch a whole nother sell, and then give you 30, 40, 50 pips from the bottom. But if you put the entry from all the way up here, you up 50 to 60 pips because you got the optimal entry because you're selling from the high instead of selling all the way down here at the low. Now, this case, being that it's only a 3-minute chart, this sell may still be valid. You got your sell, you got your entry. You see it take profit levels is 1, 2, 3 down here. So I'm not saying that this won't sell, but if I didn't want to sell this market, I want to sell it from at least sell it from the zone. And this is on all time frames. So if you're using the hour chart, and on the hour chart, this could probably be a 20 pip pullback. You 20 pips in drawdown, or you could have waited for the 20 pip pullback. And then when it came out the zone and it came back down, you're now 20 pips in profit instead of at break even. Me, myself, somebody asked, well, do you use FXM or Owanda for the Forex pairs? Me, myself, I believe I use Owanda. I definitely use Owanda. FXM, let's see if it's the same. Looks like it's very similar. But me personally, I definitely use Owanda, Mike. But they look like they're the same. They might be the same. Might be a small difference, but for the most part, Owanda and FXCM is regulated, so price should be very similar. But here, even in this case, if it doesn't break this low and this is low, I can expect a pullback. It's looking like a nice shoe wedge pattern. You got an impulsive move. This sell could be a fake out. The sell is a fake out. You got a engulfing candle. It's coming back to this order block where the smart money is. If it does not break below this yellow line, I'm not saying that ultimately we're not still looking for a sell. If this was on a higher time frame, or like an hour time frame, I would just wait to see what the market is going to do. If it breaks this trend, you got a nice triangle. Here we go. We got the sell coming in. But if it breaks this trend channel, I can expect it to come back up to previous areas, which is up here. But if it sells and breaks this low, then we're in the clear for the sell. As of right now, if we took it from the zone, we should be at about 5, closing in on 10 pips. We would have been done. We're at about 6 pips. So even if we did take this trade live, some of y'all probably did take it on demo. I didn't take it at all. But if you had took it from the entry, we're in profit, about 6 pips. 6 pips, if we take it from the entry here, stop loss is ultimately up here. I think it was 15 pips. It was about 15 pips. So if we got let's go to a regular account. If you got $1,000 account and you're risking 2% on 15 pips, you're using a 0.13 lot size. A 0.13 lot size is that's $1.30, right? Yeah, $1.30 a pip. So if you catch 10 pips, I got that right. My mind has been all over the place giving you guys. Yeah, that's $1.30 a pip, I guess. Yeah, I guess my math is right. So if it goes 10 pips, that should be $13 on a $1,000 account in a matter of 5-10 minutes. Now, if you're using a $10,000 funded account, which is the smallest, I believe, a funded account, the smallest you can get is a $10,000 account. Then you're using a 1.3, which is $13 a pip. You would have made $130 on this same trade. And it only took, in this case, 3, 6, 9, 12, 15, 20 minutes. You would have made over $100. If you make $100 a day for 21 days, you made about, or a little over $2 grand on a $10,000 account, which is 20%. 20% monthly is the goal. If we can get above, I've seen 20% weekly. 20% monthly is the goal. I don't care what account size we have. So if we have a $100,000 account, the goal is to make at least 20 grand profit within a monthly time frame. So let's see, let's scan. If you guys don't have any other questions, we're going to scan a little bit, see if we can find some more setups before we, what was that? What was I looking at? Okay, this is Euro NZD. Okay, I'm expecting. Now here's, again, notice here, I'm expecting, I believe I told you guys I was expecting a pullback in Euro NZD just from the formation of this chart, the way it looks. If it breaks this trend line, I'm definitely selling. And so again, if we're selling the market, right? We're selling the market. We're selling the market. From previous golden key, we're selling the market. Where do we want to sell from? We want to sell from the high. Notice all these wicks. Do we want to wait for it to break all the way down here? I mean, we can. That's the more conservative way. Wait for it to break the neckline. That's the conservative way in trading. Not saying that's not how you're supposed to trade. That's the safest way of doing it. But if we run the risk of waiting for it to break this, if this is an M pattern, see if I can draw this out. If this is an M pattern, it's a terrible M, excuse my handwriting. But if that's an M pattern, ordinarily they say that in the M pattern formation, you wait for it to break your neckline. If it breaks the neckline, then you can take the trade from here on down to previous leg. Why wait for it and sell it at a low? Or you can wait for it to break here, which is your session key. You can wait for it to break this and take it even. This is an even earlier trade. Or you can get an even earlier trade by using technicals. It's already breaking the trend line, so you can get the entry from up here, or you can catch this entry from the very top of the session key. Came to the top of the session key here in 15 minutes. This is for the price action traders out there. Y'all know what that is, right? At the top, this one candle right here. That's already price action indicating a reversal. Right here in this candle, it came a little bit higher, but still, notice where it came higher and it gave a wick. Notice where the body closed at, right below the zone. Again, it tried, and then it failed. Body closed right below the zone. So if I'm seeing this and understanding how the session key works, I can take, just from my manual decision making, I can take a sell from here, because it's at the top of the zone. My risk, because you want to again sell from the high, my risk is at previous high or previous candle, which is there. So if I want to run this trade and risk this trade and take a sell from here, I'm only risking 5 to 10 pips. And I'm already in profit. I can sell, you can sell it to the bottom of the zone. You could be, by the time you get to the bottom of the zone, it's 25 pips. You're done. You're out the trade. While everybody else is waiting for their confirmations, nothing wrong for the conservative traders out there. There's nothing wrong. But for the optimal trade and catching it at the high, you're already smart money is done before it breaks the neckline. They're done. Because we wait for it to break all the way down here at this low, this neckline, we wait for it, your stop loss is still all the way up here. So if you want to be the conservative trader is now risking 50 to 60 pips, which means you're using a much lower lot size. Me, being that, or us, being that we're using technicals and the session key and understanding these zones, being that our stop loss is only 5 pips, I can use a much higher lot size. And if I get 10 pips, my 10 pips, I might make $1,000 because I'm on an optimal entry. But if you're taking the entry all the way down here and the stop loss is 50 pips, your 10 pips may only be 20 bucks or 50 bucks or $100 because you have a wider range of risk. So if we're looking to sell the market, the best place to sell is at the high. And the great thing about this zone, it's going to give you the high. Or in some cases, in other case scenarios, if it's buying, this is the low. You got your high and you got your low here. See if we can find a, in this case, hold on, let's find another pip. Let's keep scanning because I don't want to miss those setups, potential setups, see where we at.
Hey, Aaron.
Yes, ma'am.
So with the 5-minute strategy, we don't, I see that we have the new zone started there, right off to the right. So we don't necessarily have to wait for the whole thing to paint, right? We can start trading from the zone.
Yeah, so you'll notice here as it was painting, you got your cliffs, your mountains, it's kind of finding itself, right? And then it just goes parallel. Once it goes parallel, that's your zone. And it's going to be like that for the next 24 hours until the next session or the next day. But if you see it is moving like this and the lines is like this, the zone hasn't been created yet. But once you get it to where it's sideways and your top and bottom is parallel, that's when you'll wait for the break. Because so the zones right now, I believe the zones are finished at 7 p.m. for the session key. Okay. Once 7 p.m. hits, you don't have to even look at the chart if you don't want to. As soon as 7 p.m. hit, you're going to notice that it's going to start going sideways. And then if you start getting a break, you'll probably get a break between 7 and 8 and be done by 9 o'clock if you're using a lower time frame. Now, if you're using an hour chart, you might not even get a signal until about 10, 11, 12, or whenever the market starts really moving. But if you're doing it on a lower time frame, you might get it like here. We got a break. We put a break. What was it? 5, 10, 15, 20, 25 minutes ago at 7. What's that? 7:10? 10 minutes. Soon as the zone it had to be. So this zone probably starts at 6. But by 7:10, you caught a sell. And you can either initially just take the sell from the jump, or you can kind of just wait to see if it gives you a better entry. If it pulls back to previous highs, you can sell from here. You can sell from here. If you're looking for a sell, I'm gonna either sell from the re-break of the zone. I can sell it if it comes all the way back up here. I can sell it from here. I can sell it from here, or I can get the optimal entry selling it from here. That's if you already know that it's selling, right? And the way that you'll know that it's already selling is if it goes 10, 20, 30 pips to the downside, and then it comes back to the zone, you already seen it push 30 pips into with bullish momentum. So when it comes back to these zones, I'm still looking for selling opportunities. Now, if it gives me 30 pips to the downside, and then it gives me, and it starts breaking above the zone, it gives me 20 pips to the upside, and then it comes back into the zone, I only follow what happened previous. So if it gives me 20 pips to the downside, right? I get my 20 pips, it comes back to the zone, don't give me no clear indication that it's respecting it, it's coming back to the zone, and it breaks above the zone, it gives me another 20 pips to the upside. When it comes back to the zone, I am now looking for buys, because the previous run was a bull run, right? Even though it did give us bearish momentum when it first started, it gave us 40 pips. When it breaks above the zone and it gives us another 20 pips, when it comes back to the zone, I'm only looking for buys. The only way I look for another sell is if it comes back below the zone. And it's very rare to where you'll get a sell, get you 20 pips, and then it'll come above the zone, get you a buy, get you 20 pips, and then it comes all the way back and sells below the zone again. That is very rare in the markets. It's not going to do that. It may, in some cases, it'll give you a sell, and it'll be nothing but sales for 24 hours. Some cases, it'll give you a sell for 20 pips, 30 pips, and then London session will kick in, and you'll wake up and you notice it went 50 to 60 pips to the upside. But after that, normally, it shouldn't go below the zone 50 pips, above the zone 50 pips, then back below the zone 50 pips. Forex pairs don't even move that fast in a 24-hour period. So if you're noticing that it's below the zone and it's selling, I am only looking for sell opportunities. Where do I sell? I can sell when it comes back to the zone and starts breaking back below. I can sell when it comes, because if I'm selling, I want to sell at the highest point possible, because we're only looking for selling opportunities as of right now anyway. And we ain't gonna look for buys until it breaks and disrespects all of these zones, and it breaks this zone and breaks above it, and that's the only way I'm gonna start looking for buys. But if it comes back into, if it's telling me to sell and it's already showing bearish momentum, when it's coming back into the zone, I'm looking for a better entry for the sale. If it gets here, selling. If it respects and it gets here, starts respecting, I'm selling. If it gets all the way up here and starts respecting, I'm selling. This ultimate sell, the best sell entry would have been the one all the way up here. Will it happen all of the time? No, it won't. But I just want you guys to understand that these areas is multiple entries or more precise entries if you ultimately already know where the market is going. As of right now, if it's below the zone, we know we're selling. If it's above the zone, we know we're buying. As of right now, it's below the zone. So all the thing I'm even worried about is finding the best entry to sell. And that's where your technicals are coming to play, where you find previous areas in the market. Ultimately, the ultimate entry, optimal entry, the ultimate entry is at the top of the zone if you want to sell. Sometimes it might not make it to the top of the zone. It might pull back to this line and then break again. It might pull all the way back to this line and then break and give you 40 pips. So far, so good with that. Well, GU is already in profit. Let's kind of scan. Let's see what I think EU might, nope, EU's not in profit.
Hey, Aaron, does it matter which time frame you begin on? Trading.
The higher the time frame, the stronger the signal, right? But notice if I'm on the hour chart, notice we're in the zone. I don't think we got no signals yet for any trades on the hour chart, right? All of them are still in the zone. So if I want to find a faster entry or an earlier entry, ultimately, I will go to the higher time frame just to kind of see where the market is at, right? If you're already experienced trader and you know how to use technicals and find different areas, your highs, your lows, support, resistance, your trend channel, stuff like that. Of course, top-down analysis is important. But if you're just strictly going off the signal and the signal itself, if you're a beginner trader, you don't really understand support, resistance, you can go off the signal itself. Then the conservative way is just wait for the hour. But if you wait for the hour signal, then we'll know. If I'm looking for this buy on this hour signal, my stop loss is going to be 10 pips below this. My stop loss would be about 30 pips. Let's see, which one is it? Was it EuroCAD? I think EuroCAD.
EURNZD, it was a huge drop. Right, since you've been talking about it. On the 3 minute.
Yeah, it's huge. That's crazy because I was expecting that, but yeah, it's selling. Now, initially, notice here on the Euro NZD, notice how it was formulating, and then it started going sideways. As soon as it started going sideways, it gave us a buy, right? Gave us the buy, came back to retest. Just off of the strategy itself, I would have probably took this buy. If I wasn't already aware of this pattern, that's why when I see this pattern, it looks like the M formation. So if I was unaware of this pattern, I would have took that buy on that 5-minute chart. Just from how the tool works and the strategy of the tool, I see the buy come in, I saw the retest, I seen this buy. If I didn't know anything about the formation, anything like that, I would have took the buy here. Even here, it came all the way back, gave us a nice little pattern. If I was unaware of that formation that I was talking about earlier, I'm taking this buy. I would have seen that. I'm like, oh, that's an easy buy. But being that I understood the technicals, that's when the technicals are coming to play, and you want to find the right pairs to use the trade on. So if I'm already anticipating a sell on Euro NZD based off of technicals and the structure of price, I just want to wait for it to give me a sell. Now, if it gives me a buy and it goes against my technicals, then I'll have to recalibrate and find the right entry. But if I already see my technicals is telling me that this wants to sell, I'm not paying no attention to this buy because it ain't nothing but enticement. In order for the smart money to sell the market, they have to entice people to buy the market. They can't sell to nobody if nobody's buying. So the retail traders, unfortunately, we get caught on the wrong end of the stick. They want to sell to us from the high, but for some reason, especially when we brand new, we're seeing this break and we're buying it at the high. They want us to buy it at the high so that they can sell it at the high. And then it's going to, of course, being that they're the ones pushing the market, is going to end up going down because they're the smart money. So the technicals can play a major key, or at least the technicals will save you from small hiccups like this one. Because if I wasn't paying attention to the technicals, if I didn't see this in pattern and this weird formation and seeing how, what time frame was I, did I see this on? Okay, yeah, and it's divergence. We got divergence coming. So the price is going higher, but divergence is coming into the market. So they're enticing people to buy just so that they can sell. So if I didn't see this weird formation or this potential information pattern, it would have been a hiccup and I would have got stuck in that small buy setup on the 5 minute. So let's go to this trade. How much would we have lost? Let's see. If I had took this buy off of this break, ultimate stop loss, if we was using the ultimate stop loss all the way down here from the entry, your stop loss is about 30 pips. So even if you're noticing on some cases on your low, like on your higher time frame, the stop loss at the most is 50 pips. The stop loss here is now 30 pips because we're on a lower time frame. But to lower the blow, I like to lower the blow. So if I do loss, I don't take a huge loss. I don't like taking a whole 30 pip stop loss. If I take a 30 pip stop loss, I seem like I should have been selling the entire time, right? So if I want to take a trade, I want a 15 pip stop loss, 20 pip stop loss, sometimes 5 pip stop loss. And the only way to do that is to find those areas in the market to where you can lower your risk. So if my stop loss is all the way down here, if I wanted to take this buy and this is my stop loss, where could I move it to? Move it up to still secure the trade. So I can use the previous low by itself because this stop loss is always going to be 10 pips above or below the actual zone, right? Just like here, the stop loss is 10 pips below it, stop loss is 10 pips. And you can also change that, by the way, as well. I forgot to mention that. You can go to the session key tool, go to the tools itself. If you wanted 10 pips above or below the zone, that's where you'll put your 10 pips here. If you wanted 5 pips above and below the zone, you can put 5 pips there. If you want to take profit to be 25 instead of 20, you can put it here. If you wanted 10 pips instead of 20, so you can change all of this to change your risk to reward ratio, right? So we'll go put it back at 10, it's back at 20. But me, I don't want to risk this much. So what could be another area of support? I can do it at the initial zone itself, which now is about, I forgot what it was. My stop loss is now about 20 pips, right? Or I can use if I'm doing this buy, previous low, which would have been here, excuse me, which would have been here, previous low, I caught the buy, and then unfortunately it would have hit my stop loss. Excuse me, my stop loss from here, entry stop loss is about 10 to 15 pips, which is not bad. A 15 pip stop loss on the trade setup is not bad at all. In order for you to lose a funded account, a 15 pip stop loss, you will have to lose. Now, if you're using, let's say, $100,000, and you're risking, depending on multiple trades, if you do a 1% risk, you can do a standard lot of 6, so that's $60. You're risking, $60 per pip. I believe the highest risk for some of these funded accounts is 5%. So you got to literally lose 5 straight trades in a daily basis. So if you're doing this and you lose one trade, I just lost one trade, and then I lose another trade, that's 2 trades in a row. Then I lose my 3rd trade in a row. I then lost 3%. I'm done for the day. I'm done. I didn't lose that much money. I didn't fail my account. I still have my account, but I lost 3 straight trades. Now, obviously, the setup was wrong. I was on the wrong pair, or I'm just having a bad day. Those things can happen, right? But you got to lose 3 straight trades in a row on a 1% ratio. Now, if you're using the 2%, then of course, you can only lose 2 trades in a row, 2.5 trades in a row, right? But if you're taking multiple setups, multiple trades, and you're already going into profit, you're increasing your winning percentage. So you can either take partial profits, take money off the table. You can finish the day off of where you're at, or you can start risking a little bit more. If you're already up 10%, and then, well, rules still apply. You still can't lose. So if you're up on a funded account, and it's for the new funded traders out there, if you go up 10% and then you done already made $10,000, and then you start over leveraging and over risking, and you go from 10% to 5%, you still lost your 5% daily window and can still lose your account. So same rules still apply. Like, even if you are making money, ordinarily me, if I'm on my regular account, I might start risking a little bit more in a sense, the more money I'm making. But if you're on a funded account, you want to kind of utilize proper risk management and be strict with that. That way you're not hitting that 5% window. So if I did take this loss and I took a 1 to 2% loss, I'm still fine with it as long as I can find a setup to give me my 2% back. Because this is very rare to where I find a setup. Because I initially saw this setup, but if I saw this sell, but if I saw this buy and I bought this buy and then I take a loss, and I go to another, maybe this might not be the pair for me. I just start scrolling. I might see, well, okay, let's see if I can get a cleaner, cleaner sell. Here's another one. Here's another, that weird pattern again. We're at the highs. Do you want to sell? What do you want to sell at? The highs, or do you want to sell at the lows? As of right now, we got highs coming in all in this area. When the ultimate high of the zone, so if it respects the zone, it never goes above the zone, and it starts breaking this zone here. This is a nice order block. This is smart money institutional zones. If it starts breaking that, and then it starts breaking this, the technicals, I'm selling. So I can get into the sell before it even breaks the low. That's kind of catching it. You're trying to catch it from the highest point period, but you don't want to jump in blindly. You still want to use other factors. You're using institutional order blocks, smart money, utilizing patterns, trend channels, trend lines to try to catch the entry. Ordinarily, if you're brand new, you don't understand technicals and institutional trading, you're not selling this until it breaks the low. But if you're understanding these patterns and you're seeing it the way I'm seeing it, if it starts breaking this zone and it's breaking this trend line, I can get the sell from a higher point. If it comes all the way up here, ultimately, I can get a sell from here. Now, naturally, we want to buy it if it breaks this zone. Of course, we're buying. If it breaks the zone and retest, of course, we're looking for buys. But if we're buying from all the way up here, our stop loss is way down here. What I wouldn't do, if I got 2 trade options, one trade option, the market is here. I can either buy it, anticipating it wants to go up, and use this as my stop loss, which is about 40 pips. That's trade option number 1. I can buy this break, stop loss is 20 pips. Option number 2, I can sell from up here, and my stop loss is 5 pips. I either got a 20 pip trade or a 5 pip trade. And there's a 50-50 chance it's either going to buy or it's going to sell. We don't know exactly where the market is going other than the technicals and having a good indication of where it could go. We don't know where it's going though. So if I got 2 trades on the table, which one am I going to take? The 20 pip stop loss trade, and we don't know how high it's going to go, or the 5 pip stop loss trade. And I know if I take this 5 pip stop loss, I can at least get 20 pips from it back to the bottom of the zone. I know that it's a 5 pip loss to a 20 pip gain. That's a 1-to-4 ratio. If I take this buy, my stop loss is 20 pips. In order to match the same 1-to-4 ratio, I got to make 80 pips on the buy. So which trade sounds more appealing? The 20 pip stop loss and the 80 pip gain, or the 5 pip stop loss and the 20 pip gain? Because it's the same win to loss ratio. Now you may make more money on an 80 pip gain if you're using the same. Well, of course you're not, because you're not using the same lot size. If I'm taking a trade A with a 5 pip stop loss, my lot size might be a 10 standard lot, which is $100 a pip. So when this goes 20 pips, I made $2,000. If you're taking a trade and your standard lot and your lot size your stop loss is 20, you're doing two standard lots. So you're doing $100. Yeah, you're doing $20 a pip. And if yours is $20 a pip and you get the same amount of pips as I do, you don't win nearly as much as Trader A, because Trader A had a smaller lot size. A higher lot size, because they had a smaller stop loss. So in some cases, you just got to find the best trades options. And if you seeing it, here goes a good trade right here. This GU. Let's go back to Euro GBP. I don't really like Euro GBP. This setup looks pretty good to me. Is kind of appealing. I don't really like trading Euro GBP personally. And if you're using a session key, the tool is most fluent on your Euro pairs, mainly Euro JPY, Euro NZD, and your GBP pairs, mainly GBP JPY, GBP NZD. I'm not saying that USD CAD don't have a session key. I'm not saying that it can't give you setups, but USD CAD is a little bit slower than GBP pairs. USD, AUD, NZD pairs. Not saying that it doesn't work. As you can see here, you got to sell out the zone. Look at that retest, man. That was a beautiful, even though it didn't come in the zone, that's the retest. So you're seeing the sell, it's pulling back. As it's pulling back to the zone, I'm like, oh man, I'm about to fire. I'm about to light this trade up. It didn't make it to the zone, but how do we know when to get into the trade? When it breaks the trend, when it breaks structure. The structure currently now, as it's pulling back to the zone, it may be just a retracement back to the zone, but it's still going in an uptrend, uptrend. We got higher highs, higher lows, higher highs, higher lows. It never made it to the zone, but as soon as it broke the trend, I can jump in the market. 100 pips, well, almost 80 pips straight into profit. That's UJ. So it does work on all pairs. It works on it. Here's another one. You got your buy opportunity, buy out the zone, retest, buy out the zone. This is that buy, optimal zone buy entry. Look at the buy. This is a perfect example. This is AU. Shout out to AU. But you got your buy, right? And your buy, as soon as it bought, you jumped in next candle, you almost got your 10 pips. Almost got your 10 pips in 5 minutes. Notice what happened. Where do we want to buy at? We want the best options to buy is either ultimately the top of the zone, but the optimal entry is at the bottom of the zone. So even before we get there, notice we are buying. We see the buy. It's in bullish momentum. We're buying. It came back to the zone. Back out the zone. Trade number one. Trade number one. Almost got to 10 pips, right? At least secured 5 of them. Trade number 2. Came back to the zone again. Trade number 2 or 3. You got one here, you got one there, you got one there. You can pick one. You got another trade in there, right? Came back out the zone again. You got another trade here. Now notice I'm picking these trades. If you're doing this based off of the regular stop loss, notice these trades, if they're lingering in the zone, stop loss is down here, either or here, or previous. Well, I would naturally just use the zone in this case scenario, either the zone or 5-10 pips below it, right? So I'm catching entry after entry after entry. After entry, these are all entries. And now at this point, I'm like, damn, I got all these trades in. I ain't get 10 pips on none of them yet. I'm sweating. But when it came down here to do this, not once, but twice. I hope y'all seen that. We're buying. This is one of those optimal entries, not just one optimal entry, but 2 of them. This zone is very, Very important. So we're buying, got all of these entries that's coming in. You could have caught it from here. You missed this one. You caught another entry here, missed all of them. It gave you a whole bunch of opportunities to get yourself in the market. Get in the game. Hurry up and get in the game because we're about to give you your 10 pips. 28 right there, 30 pips to the upside. That's if you bought it. All of these entries here now, you got about 20 pips. You caught your 10 pips. Finally, your optimal entry though, the optimal entry from this candle back up is 40 pips. So you caught 20 pips on one of these or 20 pips on multiple of these, and you caught another 40 pips on this trade. Not only did you catch it once, it came all the way, I hope y'all see this, it came all the way back down to the bottom of the zone again for another optimal entry and went straight into profit for another 40 pips. So when you want to buy the market, and this is in any case scenario, if we're trading the market, they say you looking for a buy, where are we buying from? People all up here buying. They're buying at the highs. They're buying all up here, buying. If you want to buy at the high, at least buy when it goes into a zone and breaking the zone. This is the highest you want to buy is from up here. But if you're buying and it gets all the way down here, this is the optimal trade. Your stop loss is literally 10 pips, or you can close it down to 5 pips. If it closes anywhere under this zone, I know it's in seller's territory. I'm getting out the trade. It came here, it wicked. It came and wicked again. I'm getting straight in. Stop loss is at the bottom of the zone. Previous low at the bottom of the zone. If it comes anywhere near bottom of the zone, then I'm wrong. But if it's respecting this low, it ain't never gonna go below the, if it wants to buy, this is the lowest it's gonna go. This is the lowest it's going to go for the day. That's the lowest of the day. And it came back to the low, respected it, and took off. No pullback whatsoever. 50 pips. Came down again. In case you missed the optimal entry the first time, I came back again to give you another one for another 50 pips. I mean, straight into profit. Only pullback you had was right here. After that, it went straight to profit, straight to profit, straight to profit. You was trying to close out. You were like, damn, it's still going up. I'm not about to close. It's still going up. Only brief stop was here, and it didn't even come back to previous areas. It continued to go up. You could have caught this entire 50 pip move in an hour, 2 hours, maybe less than 2 hours, straight into profit. But that's AUD USD. Like I said, it works on all trading pairs. It's another one. Buy, retest, 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 retest. Do you see all of these retests at the high of the zone? Let's move this golden key real quick. People are seeing this, they're buying, but then it starts to stalling. It's stalling. People are selling. They seeing this, it went up, they're anticipating the pullback back down to this area. So you're supposed to sell at the high. They're selling here. Oh, I got another sell here. They're selling here. They're selling here. They're selling. They're selling at the high. You're supposed to sell at the high. That's what you're supposed to do. But notice what's going on. This is a whole channel. This channel is on top of the zone. So what we should be doing, we should be buying. Where are we buying? It's people that are selling at the top. We buying at the low. We're buying from the low because it's going to go up. This is a 5-minute chart. So the trades are short-lived. Now, if this was an hour chart, this would have been a good 100 pip move all the way up to the upside. But y'all see this buy, retest, retest, all of these retests, all of these retests, all of these retests, and you got your 50 pips. It took a while, but it gave you 1, 2, 3, 4, 5, 6, 7, 8, 9 chances to get your butt in the market before it gives you 50 pips. Because it's telling you where it wants to go. It's telling you it's buying above the zone. That's AUD CAD. Let's go to an NZDP. I haven't looked at NZD for a while. They go that entry again. I'm telling you, when y'all got this tool, y'all back test, y'all see these optimal entries. People are seeing this. They're like, oh, they're buying. People are buying right here. They're buying. Why buy at the high of the zone? That's the great thing of having the zone. That's an easy sell from the high. It's telling us to sell. It could be one thing if it never told us to sell and it's up here and people were like, oh, I don't know what to do. Should I buy it now? Should I sell it? It's telling us to sell. It's selling. I don't see buy nowhere near on this chart. It's telling us to sell. Where do you want to sell? From the high. of the zone. And then after you feeling good, I'm like, oh man, it's straight to profit. You can take another sale right here if you want to. You're already seeing your technicals is being broken for my technical traders out there. Technicals are starting to be broken. Already broken, came back to retest, got another entry, and it went straight into profit. Guess what? You can feel a little spicy and jump in again when it breaks the actual low. Now you got 2 to 3 potential trades in. This trade, if you're taking it conservative, is an easy 20 pips, 30 pips. All you need is 10. If you're on a funded account, all you need is 10. You would have quit your 10 in 10 minutes. You'd have been done. If you caught it from all the way up here, though, it's 40 pips in an hour, or 80 pips if you took 2 of them. That's NZDJPY. No, here's another one. I can guarantee here's another one. This was tricky. It's telling you to sell. This is a tricky one. This is a tricky one. This is the one when if you got both, if it's telling you to buy and sell in the 24-hour period, you have to look at both sides of the chart. So the first initial signal was a buy, right? You got your buy, you got the 25 pips. Second initial signal is a sell, right? So now that we didn't already close out on the buy. We're seeing the pullback is now telling us to sell. We're only looking for sellers opportunities. Where do we sell from? The high. If it gets there. Now, this is where it gets tricky because it did buy. It did buy. So do you want to buy up here or do you want to buy from down here? If you want to buy from down here, you would have probably took this buy right here and lost 5 pips. But then it told you to sell. So now you're looking for sellers opportunities. It came all the way back to the high, even though at one point in time it was buying. Ultimately, it can break, which what it eventually did. But at this point in time in the market, we're following the sale. And you could have caught this sale from the high and caught your 10 pips or 20 pips to the downside. Done. You're done, right? So then it comes back into the market. We're already looking for the sales. We're looking for sales. Now, the conservative traders, that's the thing. That's why I wanted to pinpoint these optimal entries. Because if you're waiting, like the retail traders or the conservative traders, you're waiting for the retest. Everybody's selling at the low. In this case scenario, we're selling at the low. We're anticipating the sale. Of course, we wanted to continue. If the session key was 100%, it would have continued and gave us our 20, 30, 50, 100 pips, right? It doesn't work like that all of the time in the market. The market is very unpredictable. So we got to make sure that we're getting in the right side of the trade at the right time, using the right tools, and being that we're selling currently here. We already closed out on the buys. Is now telling us that we need to look out for sales. Where are we selling from? If it comes all the way to the high, this is the optimal entry. This is where I want to sell it from. It might not come to the high all the time, but this is where I want to sell it from. If I'm not selling it from the optimal entry, then I'm waiting for the break again, and I'm selling it way down here, which is fine. This is, it's natural strategy. If you're selling, you wait for the retest. If you're not sure, wait for it to at least break back below and you catch the sale. Unfortunately, this sale didn't go to your take profit 1. But if you had to take this sale from here, you at least got your 10 pips. Even if you did take the sale on the break of the zone. Now, in this case, I wouldn't even wait. If it's all the way up here and I didn't take this sell signal here, I'm putting the sell stop right below the zone. So as soon as it starts breaking below the zone, I'm already in the trade. I got my 10 pips. But say, for instance, I didn't get my 10 pips. It pulled against me. I lost that trade, right? I lost the trade. It came back above. I won this initial sale. I won this initial buy. I won that trade. I might have taken this trade, this optimal entry. I'm up 40 pips. I'm done for the day, for real. I'm not even looking at NZDJPY no more. But what if I was? I didn't take these trades. I'm looking, I'm noticing it wants to buy. It's buying again now, right? Here's a sell entry that EuroCAD on the hour chart now. I believe we caught it on the 3-minute. That's the official signal for the sell on EuroCAD. We're going to get to that in a minute before we close out. But notice now it's seesawing. It went buys, it went sell. This is one of those. That's why I don't trade all other pairs. This is one of those. It went buying, it went selling. It don't want to make up its mind. It's buying again. It's back above the zone again. It don't even want to make up its mind. That's why I don't trade the NZD pairs and as much as the GBP or the Euro pairs, because you will get a lot of hectic movements, even though you still caught your 10 pips on the buy. You caught your little 10 pips on the sale right here, or 40 pips from the optimal entry. Right, but notice now we're buying again, buying again, buying again. If we're buying again and you notice that it's back above the zone, where do we want to buy from? the high? Or do we want to buy from, there goes that optimal entry again. Not once, but twice. So that's, I'm trying to, and we're gonna continue to go over this and over till you guys can see the difference and understand how to utilize both sides of the zone. Because naturally, some traders would have seen this and be like, oh, I want to sell. They see the sell from the left, they see it, they want to sell. Do you want to sell at the low or sell from the high? Now we already see the zone. The zone has already been disrespected on both ways. It don't went above it, it don't went below it. So now we know that it could potentially go above the zone or below the zone. And we're looking for trade opportunities. If we want to buy the market, where do we want to buy from? Do we want to buy it from a way up here, or do we want to buy at the low? If we want to sell from the zone, do we want to sell when it breaks all the way down here, or do we want to sell from the high? As of right now, the tool, I'm trying to get the program to where he can get these optimal entries in for you guys and make it much easier to see it. But manually, I hope you guys are seeing how important the zone is and how you can take advantage of it on a very small time frame. Let's go to the 1 minute chart for a second. See if we can find it. Where was we at? Below the zone. 1 minute chart. Here we go. Look at that retest on the minute chart. I'm talking about to the pip. Top of the zone. If you want to sell from here, your stop loss is literally like 2-3 pips.
I think there's still definition about Jesus' name. I mean, here a lot.
Missed the sell from the top of the zone on GA. Let's see. Let's pull it up. I know we just had EuroCAD give us a signal. Oh man. See, 15-minute chart. Oh yeah, we selling. GA is definitely selling. It didn't quite now, depending on the time frame. Let's see if we go to a 3-minute time frame. It didn't quite get to the top, but it's definitely pulling back. This is, I guess, what's today? Oh, I forgot. Today is Thursday. So the market is going to act weird between today and tomorrow. Anyway, that's why the formations look funny to me. But yeah, notice here we got the sell on the 3-minute, pull back into the zone, sold again, pull back into the zone, sold again. If you catch it from the initial zone itself, it already gave us our 10 pips. GA already gave us our 10 pips on a 3-minute chart. EuroCAD is starting to sell. EuroCAD is the sell that we was looking at earlier, I believe. Wasn't it EuroCAD? So this one was EuroCAD. Euro NZD is already in sales. We was anticipating that from the M pattern, so that's already in profit. Euro AUD is still in the zone, so we ain't even worried about it. Euro J, same thing for JPY, still in the zone, ain't worried about it. I don't like trading Euro GBP, but I'm anticipating this sell. Was it GU? I believe it was GU. GU sale. Notice I think this GU was a sale that we took. Or was it GU or GCAD? It was one of them. But notice you got the sale, and then you got the retest.
It's all right. I can't come to the phone right now, but
you got your retest of the sale, right? And you could have just bought it from your entry. You got your 10 pips. It's at your 10 pips as we speak. On GU, GA is starting to sell a little bit, right? GCAD. Done for today. GCAD is done. I think it was GCAD that we actually took live. So if anybody took it live on demo, just let us know what your results were, because I believe that this was the trade that we were taking live, if I'm not mistaken, just to test out. That's off the entry. There, you 20 pips right there, 10, 20 pips to the downside. We'll be done. We'd have been done right now. Other than answering questions and going over the strategy with trading wise, we'll be done. 10 pips on GCAD. And I believe this was a 15 pip stop loss. If you had a $100,000 account, 15 pip stop loss, and you're doing a 2 pip risk. I'm sorry, a 2% risk. It is $130 a pip, which is 10 pips. You done made $1,300. We're done. We done made everybody on the call like, oh, I made my $1,000 for the day. The goal is $1,000 a day, 20 days a week. I mean, 20 days out the month, 20 trading days. That's your 20%, at least $1,000. Done for the day on GCAD alone. We're done. And hopefully that's how the sessions is going to run when we start the live sessions next week. Here's the session key, your sell on Euro NZD. So let's pull up Euro NZD, see what it looks like. I believe we kind of got into that. That's the sale that we were already anticipating. And this, so if I'm already anticipating the sale because of technicals, and now I'm getting the sale because the session key, it makes you feel better. Like, dang, I was right all along. And you got in earlier than the tool even giving you the signal. The tool gave us the signal on the 3 minute. I believe that alert was a 3 minute. Let's see. This is Euro NZD. Yeah, 3 minute chart. So we're already in early because of technicals. I would have gotten it up here somewhere. Then it pulled back and gave us another entry. They go that high again. I'm already anticipating the sell. Where do you want to sell at? There's that high right there. This is kind of going against the grain a little bit. I know we were talking about the session key, but just off the technicals, if I'm technical trading and I'm seeing this M pattern on the higher time frames, I'm seeing this ascending channel going up. This weird, I can't remember the name of this weird formation, but I'm anticipating a sell from this M pattern. Where do I want to sell? If I want to sell, what do you sell? At the high, right? Sell at the high. So the zone gave me the high. The high is up here. I anticipated the break from selling from the high of the zone. It was above the zone to fake out. It got to anticipate the buys. If it when it makes this Euro NZD could very well give you 100 pips in the next 24 hours before the market goes. Euro NZD can break down to take profit 3 or back down to the 122 pips. If it wants to give me a 122 pip trade, it has to entice a lot of buyers to get into the market. If you want to make a major move like that, they need a lot of buyers in the market. Buys, here's the buyers coming in right here. I'm anticipating the sale though, based off the technicals. So where do I want to sell at again? The high. It's breaking technicals. I'm selling on this candle right there. So if I sell on that candle right there because it's starting to break structure, it already went down 20 pips. I'm done. Even to the bottom of the zone, I caught my 10 pips. I can be done as soon as it gets to the bottom of the zone because I was able to catch it at the high, right? Now that we got it below the zone, what is it doing as we speak? If we can't get it at the high, the only other areas is previous areas of resistance. This is the ultimate high here. Previous area here, you got a previous area here, right here. So you can either sell from these areas or you can be the conservative trader and just follow the signal from what it is. It's selling, put in the sell, stop loss. Stop loss is 30 pips. Buy USD JPY. We'll get to that in a second. So if the stop loss is 30 pips, I know I can use a 6 standard stop lot size, right? $60 a pip, 30 pips. That's $1,800 roughly if I was to take this trade. If that's a $100,000 account, of course. But notice what's happening. It came back to the T, and now we're selling from the zone. So I would take the sell. It says telling us to sell. It came to the zone. It ain't go nowhere near back into the zone. It dang sure ain't go above the zone. My points of resistance is this yellow line here. That's one. I'm selling. If this candle closes below it, I'm selling in this candle. The previous resistance is here, this yellow line, or here. So as long as it stays, if I take this sell, right now I still ain't take the sell yet because they got to give me a red candle. The very next red candle, if it stays below these yellow lines and it gives me another clear indication that it wants to go back below, that's when I sell. And then I'm gonna just watch it. As long as it stays below my points of resistance, which is this yellow line, if it breaks above it, I'm like, uh-oh, let me watch a little closer. And then it breaks this one, my ultimate stop loss is all the way up here. But if I want to use a smaller lot size for a higher risk to reward, then I will have to use other areas. I can use ultimately the top of the zone. I can use this yellow line here, which is previous. Top of the zone is basically this resistance. This yellow line was this resistance when it came down. This yellow line was this resistance when it came down. So if it does sell and it gives me a red candle and it starts selling below, I can use this as my stop loss, right? It's more riskier because it can come and tap your stop loss and take you out, but it's only 5 pips. It's only 5 pips. Or I can risk a little bit more and use this as previous resistance, which is 15 pips. Or ultimately, I can use the entire zone and top of the zone, which is 20 pips. Or I can just use the signal and use the stop loss, which is 30 pips. So if I want to find a precise entry, if I believe in this trade and I'm only looking for 10 pips, 20 pips anyway, I'm going to go ahead and take this trade off of this sell and use 5 pips as my stop loss. 5 pip stop loss on $60 a pip is $300. I only lost $300. You can do that. You can do that 8 times in a row almost. If you lose 5 to 8 trades in a row off of this simple setup, which is very rare, you shouldn't be losing no 8 trades in a row off of these setups. And hopefully after these trainings and after these sessions, you'll understand. You're going to take losses here and there, but we're rarely going to take a 3 trade. If we lose 3 straight trades, we're not trading. We can stop trading for the day. We had a bad day, but it shouldn't be a way to where you just lost 3 trades in a row. You might lose 1. You're going to lose 1. You might even lose 2 in a row. 3, stop it for the day. I will stop for the day, recoup, and come back tomorrow and get everything times 3 the next day, right? So I'll sell this trade right here. And all we look for is 10 pips on Euro NZD. Let's go back. Let's kind of scan a little bit. Let's see. We got Euro USD, start from the top, start seeing what's going on. Euro USD is starting to break a little bit. We're at this below the zone. I haven't done no technicals. I've been under the weather and fighting sleep all through the week. I haven't been focused on being able to manage and look at the charts at all for real this week. So I'm not even gonna do that. But just off of the zone itself, there goes your Euro CAD, 10 pips. Euro NZD, we're anticipating a fall on that. Euro AUD still in the zone, so we're not even worried about it. The best sales was the sell at the high. Sell at the high. Even though it didn't, I am looking for anticipating the sell. I guess that's why that trend line is there. And it's starting to break the trend. So we can naturally already be in this trade just based off the technicals, right? You got your break of the trend, then you got the retest right there. I would have got in on this very next candle. Stop loss would have been right above previous high, which is here, which would have been about 5 to 10 pips. Then I could have took this trade to the bottom of the zone and just closed out. I don't even have to wait for it to break. If it breaks and is a clear break, I can hold it. But all I'm looking for is 10 pips. On a $100,000, a $10,000, $20,000, $50,000, $100,000 account, all you need is 10 pips. And you can get that in a matter of minutes using the session key. Let's keep going. Euro JPY still in the zone. Ain't even worried about it. Ain't no point of trading it if we don't have no clear indication, or we're no point of forcing the market. They go that GU trade. Sell, retest, and sold again. GU is done. I think we went over that. GU is done, 10 pips. All right. GA, same thing. Got your sell, retest, came back, retest is currently giving you your 10 pips as we speak on GA. GCAD, way more than 10 pips. This is nearing the 25 pip zone as we speak. You can be done for the day just off of the Euro and GBP pairs. That's why again, I like trading Euro GBP pairs. You notice there, if you're only looking for 10 pips, wow, that was a beautiful trade right there. GN. Sell. Lower time frame. 1 minute chart as an easy trend channel. Got the sell, got your pullback to the zone. There's your trend channel right there. And it's ironic, very ironic that it breaks the trend and it comes back to test the trend channel or the trend line and the zone at the same time. We call those energy points. When market comes back, if it breaks a trend channel and you still got a point of resistance and it comes back to test not only the top of the zone, but also the trend channel, that's 2 areas of resistance in one spot. And you notice how big the candle was afterwards. It broke the trend channel. It's breaking structure, Came back to retest not only structure, which is the same trend line, but it also is retesting the zone. Usually when you got energy points like that, where the market is testing 2 areas or 3 areas of support and resistance, you're going to get a huge move right after it. And that's why this candle was so big. Not only that, it gave you, oh, wrong tool. It gave you 25 pips. That was an easy sell. That's an easy 25 pips right there. Got your sell. Retest, even if I just take away the trend line, even though it is a double confirmation, still, it came back to the zone and it's coming back out the zone. I'm selling all over again. 25 pips on GM. GJ, where's it at? Where we at? We're selling on GJ. We've been selling for a minute. It's kind of stalling right under the zone. But notice from the zone, from the entry, it gave you your 10 pips already. Initial sale, entry 1, you got an entry 2, you got an entry right here, that's 3. Came back to previous low, broke again, entry 4, entry 5, 6 entries, 7 entries, 7, 8 entries, 9 entries. Pick one of the 9 or all of the 9. You got 10 pips. That's GJ. UCAD, still in the zone. Not even worried about it. Now, if I go and look into the technicals real quick, Lord have mercy. Already seeing the shoe pattern. It's already been going down. It's giving you a descending wedge. This is a shoe pattern. I love these patterns right here, right? I don't know if you guys are familiar with this pattern, but I love this pattern, man. It's beautiful, beautiful pattern. It looks like a shoe. It comes down, gives you equal highs, but then it starts giving you equal lows, and then it starts giving you lower highs with equal lows. So it's kind of like going down. It looks like it's going in a downtrend, but the support or the bottom isn't changing. It's not breaking the low at all. It's giving you lower highs, but then it's starting to wedge itself and put itself in a channel, right? Let's see, where's mine? You got your trend channel, and then you got your level of support. Your ultimate order block is here, all in this area. So once I start seeing this major move to the downside, you got lower lows, lower lows, lower lows, lower lows, it stopped. You also got lower highs, lower highs, lower highs, lower highs, lower highs, lower lows. Then you got a higher high. First indication that market structure is being broken, because this was the previous high. Now you got a higher high. When you get this higher high, we want to see where's the low going to end up at. The low ended up in the same spot here. So now you got a double bottom. And then you're still getting your lower lows, lower lows, lower lows, but you still got that first indication of a higher high here, right? That's the first one. So you just wait for it to break. You wait for the break. Here's your break of the channel right here. And then you have another higher high, right? That high came way above this high as well. Then it came back into the same area of support. You can buy it all over. Where we supposed to be buying? We're supposed to be buying from the low. So if I'm anticipating a reversal based off of this pattern, I'm anticipating it to go up. I don't want to buy it when it starts breaking the highs. I don't want to buy it up here. I don't want to buy up here. Notice what happened when everybody started buying up here and went straight back to where it started from. Retail traders will get trapped in this all of the time, right? I don't want to buy it up here. You want to buy it down there. You buy it, even though the same rules apply. I forgot, I'm looking at the 1 minute chart, but even if this was a 4 minute chart, the same rules still apply on market structure, right? But notice, we got to buy, you got your higher highs. It's not going nowhere near low this box. It's not going nowhere near low this box. So if I'm anticipating to buy, where do I want to buy it from?
Top.
The low. If I want to buy it from the low. So hopefully, if I'm anticipating this buy, if this pattern is 80% to 90% correct, I'm already anticipating this buy based off of the formation of this candle. I'm already seeing structure being broken. This is structure being broken here. I'm already starting to see higher highs and higher lows. This is my ultimate low here. This is one little box right here. This is my ultimate low. It can't go no further than this. If I want to buy it, I need to start buying now because I'll get a better entry. Why do I got to wait for it to come all the way up here to start buying way up here when I can buy it from below? That's when you start adding the technicals. If you want to get further into the technical, if you still are unsure, then that's where your trend comes into play. If you don't want to buy it right here initially, even if you do buy it right here initially, your stop loss will be 5 pips. 5 pips. If you want to wait for it, then okay, you can wait for it to break the trend line at least. And now your stop loss will be about 10 pips. Or you can just use the signal for what it is, be conservative and do the safest way, right? If you're not used to technicals or you're brand new, I suggest just wait for the signal to tell you to buy. Right now, I'm anticipating to buy. Did it tell me to buy yet? No, that's me being a little bit riskier just based off of my technicals. I'm believing more self in my trading experience to try to catch this buy early. That way, I don't have to wait for it to go up another 30 pips. If I buy this right now and it comes all the way to the top of the zone, if I buy this right now and it comes up to the top of the zone, I'm done. It's 11 pips. All I need is 10. Or I can wait for it to break the zone and then it put me in drawdown. And this, you never know what can happen. We don't know what's going to happen in the market. But if I can get these early entries, by the time it even breaks the zone, you're done. That's usually how it works when it comes to institutional trading or the smart money concepts. They don't sit in the trade for hours and hours and hours. They're the ones that's forcing the market up. 10 pips, they're out. They done made $100 million or 100,000, however much they make in the hedge firms. They're not sitting in trades for hours, catching 100 pips. They might have enforced the move to go 100 pips, but they enforced it from the bottom and they got out. As soon as they got their 7 pips, 10 pips, 15 pips, whatever it is, they're done. That way they don't got to sit there and look at the chart for hours and hours and hours a day. So if we want to buy this market, where should we buy it from? Buy it from the low. Did it tell us to buy yet? No, right? But that's more so just understanding the technicals and start utilizing the technicals and fundamentals in addition to the actual tool itself. This tool hasn't told us to buy, but I'm seeing this pattern. Even though it's on a 1 minute pattern, these patterns don't change and it is no different. The impulsive move, I can almost guarantee you this was all divergence. This looks like, I forget what it's called. I believe it's a wedge pattern. Like it looks like a shoe wedge right here, all in this area. You got a little heel and then you got the heel, then it comes up and you got little toes coming out, the female shoe wedge. The shoe, you got your wedge, you know what I'm saying? I believe that's the wedge pattern. I believe that's what they call it. But notice it broke higher highs, broke structure, and it came all the way back to the order block. We're buying. It came back to the order block again right there. I would buy that just off of technicals. Now, if I turn around tomorrow, you notice we get a signal like 3-4 hours and it seems like we got to buy on USD CAD. Like, guess what? We done. We got it in early. The buy on USD CAD signal is confirmation that or hold the trade because we already got in early. We didn't have to wait because we're looking at it on a lower time frame. I damn sure don't trade no CHF pairs. I'm sorry for the CHF traders out there. There's another one. There's another shoe pattern right here. Broke the high, came back to the order block, took off. This is another shoe pattern, the same pattern that we were just talking about. Again, it's on a 1 minute chart. But there's that wedge again. You got the wedge, shoe wedge, right? It breaks out the shoe wedge pattern, gives you a higher high here, comes back to the order block or the bottom, and then it took off. Same rules apply on all time frames. This could be a second chart and it'll still look like this and it'll still, the same rules will apply. So once you understand technicals, market structure, and price action, if you can do it on a 4-hour chart, you can do it on a minute chart. It's just you might not get 100 pips out of it. It might only give you 3 pips or 5 pips. Like this one move right here, breaking this channel. It looks like, hold on. What was that we were just on? Was it USD CAD? Lower, because that thing can look similar. I think it was USD CAD. Let's go back. No, it was GBP NZD. I forget what it was now. But on USHF, it's almost the same thing. Was it? I don't lost myself, you guys. Hold on, bear with me. Was it NZD, AUD? Was it that low? All right. Let's go back. Let's see where we at with these trades. GJ. Back to the zone. It was UCAD. Okay. So notice UCAD, you got your breaking structure out of this wedge pattern, you got the breaking structure, and you got your break here, and it's coming down to this trend channel. USD, CHF. This ain't the same pair I was looking at. What it is. I just don't like CHF, man. It's a little too choppy for me. You guys may think differently, but yeah, okay. Here we got a great buy for UJ coming in. Sometimes we got to be quick with some of these trades. This buy already came in, pulled out, gave us another entry, pulled out, gave us another entry. Currently, it's in profit on UJ. If we was to look at the technicals, see what's coming from. Well, that shoe pattern again. UJ about to fly. UJ gave us, just notice the sale, retest, beautiful retest for the sale. The sale already, well, first of all, the sale. Hello?
Hi. Was that me? Okay, I'm sorry.
Now you fine. Notice we got the sale, first retest here, another potential retest there. Then you just got this stair step ladder all the way back to the zone for a beautiful sale, breaks the trend line. That sale gave you almost 80 pips. After an 80 pip move on UJ, you can almost expect at least a 20 to 30 to 40 pip pullback, a retracement. That's for the Fibonacci traders out there. Let's pull out the Fib and see where UJ can potentially come to. And again, this is on a minute chart. We're doing this now. I don't have to go on a higher time frame. We don't necessarily have to. I mean, we can. But if we catch the initial drop from here, where's the Fib? Initial drop from here to the low, which is here. We can at least expect it to get back to the 50% or 62.8 or the 0.62.8. I forget. I haven't used Fibs in a while, but I'm anticipating to get back to the zone, back into this area, back somewhere in this area. So we got the buy. We can expect it to buy at least 25 pips. It dropped 80. It's already starting to pull back. Let's get a little 10 pips out of UJ. It's another trade we can probably catch an easy 10 pips off of. It's probably already on its way. If we had caught it earlier, we halfway there. But that's UJ. I took the session key off. What the heck did I do that for? All right, let's add the session key again. Session key. And I hope some of you guys may see, but we got some other tools that's coming. We got the wicked entry. We got the session key. We got the PMWBO, the PMBO. We got the momentum oscillator and the entry optimizer, as well as the golden key. So we still are working on some added tools to just help even further in the confirmations. Let's pull up the session key again. That buy on UJ is gone. That was an easy one. From the entry, I don't think it gave us 10 pips though yet. Yeah, almost 8 pips. Got about 8 pips out of UJ. It's pulling back now as we speak. AUD, everything that's in the zone. That's in the zone. AUD NZD's in the zone. And we got AUD CAD breaking out the zone, pushing heavily too. We can expect, notice that the previous zone was here. It may come straight down here. If it does, and again, y'all can pay attention to previous zones. Previous zones will act as support and resistance as well. That's an easy 17 pips that you can get on AUD CAD as we speak. Now, if you want to take this sale, then of course, AUD CAD, your stop loss will be ultimately at the previous high, ultimately above the zone. So if we was AUD CAD, selling Euro USD, we'll get to that in a second. AUD CAD, stop loss, if we was to sell it out the zone as we speak, stop loss is 20 pips. See, now it's giving us the sell. On the 1 minute chart, it's giving us the sell. 15-minute chart, it ain't told us to do nothing yet. So if you want to be conservative, you wait for the signal on the higher time frame. But if you're trying to get in early, notice right now, the seller tells you to sell on a 15-minute chart. This thing can go 40 pips and then tell you to sell. and it will be 50 pips below the zone already on the 15-minute chart. And then it tell you to sell at the close of the candle. Right now it's pulling back. But if you get in it on a 1-minute chart, you done caught the whole 50 pips. Because you didn't wait for the 15-minute candle to close. So now we have a sell. We have a pullback. We have a sell. We have a pullback. The pullback, you have to find your areas, your points of interest for your ceiling or your resistance. If it does pull back, we know ultimately, as long as it stays under the zone, we're still looking for sales. But what are the other areas of interest that we need to pay attention to? Previous highs. You got a previous high here. You got a previous high here. You have previous highs here. You got another ultimately. You don't have to draw them all out, but these are your points of interest. These yellow lines are now my points of interest. So if I want to sell this, I know ultimately my stop loss is up here. As long as it stays below the zone, I know I'm in profit. But if it does come in the zone and I'm seeing it respecting this first initial yellow line, I'm still in the clear for the sale. If it breaks this one, but it respects this second yellow line, I'm still in the clear for the sale. If it breaks both of these and starts breaking above this yellow line, I need to start paying attention to what's going on because market structure is starting to be broken. If it breaks this yellow line, I really need to be worried. I still am in the sale. I might be in about 10 pips, 10 pips in drawdown, but as long as I'm still not above the zone, I'm still in the clear though, right? We want the best trades. We can give us a sale, go straight to sale, give us 10 pips, we done. And sometimes it will work like that. But we may get in the cases where it'll sell, give you 5 pips, didn't quite hit to take profit, pull back on you a little bit, dance at your points of interest, and then eventually sell and give you your 50 pips that you was looking for. We can't predict or push or persuade the market to move when we want it to. We just got to be prepared for when we get in the trade. So now that we in this sale, as long as it goes below this zone, we know we all way in profit, right? We straighten the profit. If it doesn't, and it pulls back to these areas and is rejecting it, I'm still in the clear. I can probably even take another sale, right? If you want to get a little greedy, we shouldn't be greedy or extra risky. But once you understand these levels of points of interest and you're knowing ultimately you want to sell, where do you want to sell from again? The highest point possible. So if I'm selling this, notice we're selling, we're going back into profit, and it gives me 20 pips. And then it comes way back to this zone. It may not reach all the way up here to give you the optimal entry, where you can use a 3-pip stop loss. It may not even come all the way this high for you to sell up here. It may come here though. It may come back here though. It may even come here. It might not even get this high. It may only come back to this level. So where do we want to sell again? We want to sell at the highs. Is it going to reach the high every single time? Because this zone is the high. This is the high of the day. Is it going to reach the high of the day again? It might not. It might keep giving you lower lows and lower lows, all the way until the next day. And then you'll have another zone. If it reaches the high of the day, after it already gave you 20 pips and it comes back to the high of the day, we sell. Does it come back to the high of the day all the time? It doesn't. It might only come back to previous areas of resistance. So if this gives me a good 20 pip move, and this is nice, you're seeing nice momentum coming into the candles, and then it comes back here to this yellow line, you have to make the decision. What do? I know I want to sell. I know I'm not trying to buy for nothing. What am I buying for? We're selling, right? I do want to sell. It broke the zone, gave me my 20 pips. Should I wait for it and just wait for it to break the zone again and sell? You can. That's a conservative way of doing it. But if you want a better entry, where are you selling it from? Here, 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 or ultimately up here. That's only if it's a clear indication that it wants to sell. If it's already been selling. Right now, it's not a clear indication it wants to sell. This is only a minute chart. Like if it's giving you a clear indication and you looking at it on like a 5-minute chart or a 15-minute chart and it's hitting take profit 1, take profit 2s, it's been selling for the majority of the period, and then it pulls back up to these zones. These are your interests of resistance. If it starts rejecting, I would much rather sell it up here than to wait for it to break way down here. Now, right now, it's looking like it wants to break structure, but it's coming to our zone. So you got a decision to make. Do we sell when it breaks here, sell at the low? Or do we want to start finding entries to start selling up here? Let's go to this is where the lower time frames can start coming into play. We're on a 5 second now. This is now a 5 second chart. So on a 5 second chart, instead of waiting a whole minute, on this 5 second chart, we're now selling. I'll sell again. And on a 5, if this starts breaking below the zone on a 5 second chart, I'm already looking for a sale. The entry is here. It's about to activate the entry and hopefully give you the profit. Where was the other optimal entry? Previous highs. Previous highs. You want to sell from the previous highs. This was ultimately marking out this on the minute chart. But now that we're on a 5 second chart, this was the previous high, right? Here, notice where it came to. It's your area point of resistance. These are the areas naturally you want to sell at. That's when you become fluent with the tool. You understand market structure. You understand price action. I'm not suggesting people utilize these other areas of selling areas unless they understand the market. If you don't understand the market like that and you're still unsure of your trading abilities, all of us have been down that road. Just follow the signal itself. It's telling you to sell, use the stop loss up here. And just find your proper lot size with the calculator, right? But if you understand trading a little bit and you've been back testing and you've been seeing these areas being respected and you want to get a little spicy and up your lot size a little bit, then you can take a sell with a lower stop loss. In order to do that, you got to, instead of selling it way down here, you got to find areas to sell. Either you're selling it from a higher area, or if you're selling it from down here, your stop loss is at a lower point. Like if I want to sell it from down here, stop loss is up here, previous high, right? So if I do take the sale from down here, my stop loss will be at above previous high, and that's still less than 10 pips. Or I can use this as my stop loss. That's about 10 pips, 15 pips. You know what I'm saying? Notice we're still selling. Conservative traders, they're waiting for okay, I see the sale, I'm gonna put a sell stop right here. If it wants to continue, activate my sell stop and go into profit. There's nothing wrong with that, especially if you're on a 5 second chart. Nothing wrong with this sale. If that was the case, this sale was going to activate. It's about to activate now. Or you could have took the sale from the zone. You'll already be, well, it was a 5 second chart. You probably wouldn't be in profit. But notice here, if you had took the sale from up here, you'd definitely be in profit. It wouldn't be in much. But the sale from previous resistance, you're down. You're at least 5 pips in profit. You're halfway there at least just by catching the optimal entry. There's some people that just got into the trade and they're in drawdown. You got into the trade at a higher because you want to sell from a higher point. You're 5 pips in profit off the same trade. If somebody watching the signal, they got the sale, they're like, oh, I see the sale, they selling down here. They're starting to get into profit now. All right, but you could have been another trader seeing this exact same sell signal on a 5 second, and you could have caught the trade from up here, and you're already 5 nearing your 10 pips profit because you got the sell at a high instead of selling at a low. Now, the great thing about the session key tool, even though this is the low of the zone, you still can sell because this zone is very important, right? You can still sell from this low and get your 10 pips. That's the main, the tool itself gives you a zone. If it breaks below the zone, then you can get your 80 pips. So of course it has to break some low in order for it to go into profit. So you can just follow this sell from the zone, this from the low and just ride it. If you want a better entry though, that's when that's when your technicals will come into play. But even just as AUD CAD, I don't even trade AUD CAD, but as you can see, it is working in its favor as we speak in real time on the 5 second chart. I don't like you CHFS, so we're gonna kind of skip them. Let's go back to normal time frame. When you look at a 5 second chart, people are like, man, that's ridiculous. How can you trade off of that? Trust me, I've been trading off of the 15 second. There's been times you can get an entry, go that low again. You can get entry on a 1 second chart and get right in the trade. I've been gotten the trades on a 1 second chart, especially on a pullback on a 1 second chart, and it went instantly in profit. I'm talking about as soon as I put the trade in, it's blue and it never turns red. based off of some of these tools. It don't happen all the time, but that's more so back testing, practicing, understanding these levels, understanding the pullbacks and how to maximize the tool to your advantage. Here goes one of those optimal entry trades, y'all. Optimal entry trades. We got the sell. It told us to sell. Look where it's at. Look where it's at. Let's look at it on a higher time frame just to see where it's going. See, I like, there go that shoe pattern again. That's an iffy one for me. Based off technicals, that will be an iffy one. But just seeing how this has been choppy, up and down, up and down, up and down, up and down. It's been going up. When is it going to come back down? Eventually, it has to pull back. Eventually, it'll to at least get to the bottom of these areas. It's either that or it's about to start breaking. I'm seeing structure being broken even as we speak within this hour. And it potentially has a long way to go. Is it going to go straight up? No, it's been going choppy, just up and down for the past two days. Up and down, it's been choppy. So if it wants to turn around, we don't know if it's going to turn around, but if it does want to sell and we're anticipating a sell, where should we sell at? The high. Sell from the high. Where's the high? The zone gave us the high right here. This is the first high that we want to start paying attention to. Is to go, there's such a key zone, the high. Look where it came to the high and it stopped. The zone was already created. Notice it was been going straight line, straight line, straight line. It came straight to the zone and stopped. Why did it stop? Straight to the zone again, tried again and stopped. Why did it stop? It's coming back to the zone again. So if you want to get into this trade, you want to be sure that's where your technicals come into play. I see it's at the high. I want to kind of take the trade like right now and take the sell. If I take the sell, it's 10 pip stop loss. If I take this sell right now, use previous areas of a high. If I take this sell right now, my stop loss, because I'm anticipating if this was to be the high of the day, if this line is the high of the day, which means it doesn't go no higher than this, my stop loss is right above the zone. So this is one of those trades where I could take the sell right now, and it could be a 1 pip stop loss if I wanted it to. Am I going to be correct? I don't know. It might blow by this and go, because on a higher time frame, it looks like it wants to go higher, but it's been going choppy for the past 2 days. It might continue to chop. Now it's above the zone. If it breaks back below the zone, it's still painting. This candle's still painting. This can be a wick. We don't know. It's a 3-minute candle. So if this 3-minute candle closes back in this zone, I'm like it is now, I'm selling this. I'm selling the very next candle because it's at the high. I want to sell it up here. Now, if I do sell it up here, now at least I got a more of a room for a stop loss. My stop loss will be above this wick. That's anticipating if it's using this as the high, this candle closes within the zone, and then red candles start to paint. I'm selling the red candles, anticipating the trend break. And if it breaks this trend, once it gets to the zone, I'm done. I don't need to wait for it to get back into seller's territory if I'm selling it from a high. Let's see if it closes. That's the sell candle. Let's go on a lower time frame and see what it's doing. Notice here, it came above, your wick closed back below. That would be the sell. On a 1 minute, that will be the sell. Stop loss is 3 pips? I'll take those trades in my sleep. The stop loss is 2 pips. I'll take that trade in my sleep. If I'm wrong, I just lost 2 pips. So what? If I'm right, though, you know how great of an entry that is if you're right? We'll come back to that one. That's NZD, JPY. Look at that setup, man. It's a trend channel, trend channel, trend channel. It's been starting to give you them lows, but notice this flat top. You got your trend channel, higher lows, higher lows, higher lows, but the highs is all the same. In some cases, it only has 2 places it can go. It has to either break these highs or it's going to break market structure to start going back downward. That's the only 2 places it can go. And at right now, it'll be best if I was to buy this because it breaks above the high. My stop loss is huge. I mean, it's not huge. It's much more than 1 pip. As of right now, we're in profit. But if I take this buy out the zone, my first initial stop loss will be here. It's 15 pips. Or at the bottom of the zone, which is normally 20 pips. I can take a 20 pip stop loss trade, or as you guys can see, I'm in profit off of a 2 pip stop loss trade. Y'all still with me? Y'all, okay, we done dumbed down a little bit. Y'all, I feel y'all still here with me now. Hopefully, y'all see this. That was an easy trade with a 2 pip stop loss. And it's already in profit. Now we want to see it break this trend channel, of course. Updated trend channel is really here, right? But even if you use, and me, I like to use multiple points. Like even though this is kind of break of structure already, but notice you got trend channel, you got break, you got points here, points here. You want to connect as many points possible. I connected that. So that's the trend channel, right? But then it break and it came back above. So when it does that, sometimes you got to kind of refresh your market structure. So that's ultimately the new trend channel, right? As long as it stays below this zone, you're in profit. If it goes above it, then you lost 2 pips and you recalibrate for the buy. Notice we're looking all for sales. It was telling us to sell an hour ago. Where are we selling at? We got a chance to get to sell it at the very high. It's not going to happen like that all the time, but these are the optimal setups where you can risk much more you got low risk for high reward, right? Because you can take this trade and catch a 20 pips just when it gets back to the bottom of the zone. Or this whole trade from a sale can go 25 pips. Now the people that's taking the sale caught they 25 pips, but you up 50 because you caught it from the high. Or it could have went 100 pips and you got 150 because you got it from the high. Selling from the high and buying from the low is really the name of the zone. Caught this. Mark said he caught the Euro NZD buy right before the signal. Shout out to Marky, man. Let me see. Let's pull it up. I believe Euro USD did call a signal too. Let's pull them up. Sell and went back into the zone. Euro NZD. Or you caught this buy here?
The one right before the red candle next to the sell.
Oh, the break. Oh, okay. The
Right
bounce.
here.
The bounce. Yep, understanding them zones. And now, as we speak right now, look where Euro NZD is at. It's now at the top of the zone, right?
Yeah.
So it gave us a sell signal after you caught the buy. It gave us a sell signal. It also gave us a buy signal. So this is one of those cases to where we have to make the best decision. Do we want to buy? If we were buying this market, we would have bought just like Mark did and bought it at a low point. Right now, I would be more interested in selling it because we're selling it at a high point.
Yep.
So with the buy already gave us a nice little move, depending on where we got it. Mark caught the buy at a better place because you're naturally supposed to buy it at a low. And now that it's at a high point, it's telling us to sell. It's best to sell it up here than to wait for it to get all the way back down here. Even though that's a conservative way of doing it, not saying that you can't wait, because ultimately, as long as this sale don't hit the stop loss, we'll wake up tomorrow and we say, okay, Euro NZD did go 25 pips. Even though it did come all the way up here, it didn't hit the stop loss, we're still looking for the, as of right now, we're looking for a sale. Where do we sell at? Down here? It ain't even down here no more. Do we sell at the here or do we sell it up here? Here's another one of those cases. I forget what the other pair was. But if this candle, it can wick out. It can come all the way up here and close back into the zone. If it does one of those numbers like it did at this previous candle, I would be more interested to start looking for a sell from the high. Now, of course, if it breaks and it keeps going above the zone and then retest the zone, we recalibrate and then we ultimately look for the buy. But right now, a point of interest is at a point of interest to sell, and it's at a great entry or a great point of interest because it's at the high of the zone. So to look at it at a lower time frame, we go to the 15-second chart. It's still buying as we speak. So it may be invalid, but if it was to be valid, we would look for market structure to break. Even though it is on a lower time frame, structure is structure. So if I did want to sell from the high, I will wait for it to break market structure. And it looks like if it does break market structure, it'll be selling from the high anyway. So I'll just look at this, watch it for the next maybe minute or two to see what it wants to do. Previous structure, we already got, so that yellow line that we're looking at is the previous high, previous structure. The previous high of the zone is where it's at now. So that yellow line is ultimately, this yellow line is up here, is the point of no return. If it goes above that, then we're going to start recalibrating and looking for buys. But if it respects, it stays below the previous high, and then it starts breaking market structure, that's a potential lower high, and we can start making lower lows in the long run. But that's just more so adding the technicals to it, and we just got to kind of be patient and watch and see what the market is actually going to tell us where it wants to go, because it's coming up to these areas, these highs. This yellow line is that previous high from before. So if it respects and stays under the yellow line and then it breaks, let's get rid of this one for a minute. That could be confusing. If it breaks this trend line, then we're still in the clear to look for the sales at the high. But as we can see right now, it's above the zone. So this will be a tricky one. If it's above the zone and it comes back to the zone and it respects the zone and it starts to go higher, then that's when we can recalibrate and start looking for buys, right? But just judging from this tool itself, it's telling us the sell has been selling below the zone, selling below the zone. I don't want to sell at the low. I want to sell at the high. So we'll see. And this is kind of tricky. Now it's above the high. If it breaks the trend channel, being that it's on a 15-second chart, I wouldn't pay that much attention until it starts coming back below the zone, because it can break the trend channel and we try to sell it from up here and then it'll bounce from the zone and go higher. And we don't want to get caught in the trap, being that we're on a 15-second chart. So it's just more so keeping an eye on it, kind of keeping track. And that's why I was telling my brother Siobhan, I was like, once we get people tuned in, even as we were going on the training, just like how Mark said, he caught the trade off of Euro NZD. I wasn't even looking at, I probably wasn't looking at it at the time, but he was able to catch the trade because he understood the strategy and how to maximize the tool. Once we got multiple people doing the exact same thing for me, Miss Marilyn Lee said she caught GBP CAD, caught 10 pips. Shout out to Mrs. Marilyn Lee. I'm glad you're here with us, ma'am. So it looks like you guys are at least getting the basics of it and you're already catching results. If you wasn't before, manually, we're going to be doing this live. I want to at least do it twice a week for session key and at least another 1 to 2 times a week for golden key. Golden key will mainly be for these hours, right? So I'll probably do another set. Well, I can't do it tomorrow. So I'll go over a brief with you guys tonight, golden key. The strategy is really the same. It's just golden key is more volatile. It's more volatile. The zone may be a little bit smaller, but the same rules apply. So all of the rules and the strategies of basically buying from the high and buying from the low and selling from the high. The same thing that we went over about the session key, same rules apply with the golden key. Only thing with the golden key, you're only trading on gold, silver, platinum, and your indices, US 30, your NASDAQ, your S&P. But those markets are very, very volatile. Like you can get 20 pips on gold in 2 minutes. You can get your 10 minutes, you can get your 10 pips in a 15-second candle on sometimes on gold. So we'll go over that briefly. And being that tomorrow's market will be closed. I apologize for kind of holding up. I know we were supposed to start earlier this week. But it looks like this signal on Euro NZD, I really would take the sell, but being that it's above the zone, I wouldn't take it just yet. But that's naturally selling it. If we want to sell it from the high of the zone, if we look at it on the hour chart, I don't want to wait for it to break down here to start selling. We can start selling it somewhere in this area. But that's, notice we have no signals yet on the hour chart. Let's get rid of these. Should I? What's this? We have no signals yet on the hour chart. Do we have one? I don't think we have one yet. That's gonna be a beautiful sell, man. Your AB is gonna be a beautiful sell. But as we can just scroll through, if we were just focusing strictly on the sales of the signals, we have none yet. But people already have been in the session, already got their 10 pips, on multiple different trade opportunities. And because we don't need that much. All we need, especially if you're on a low. Now, if we're on a lower account, we trade on like $100 account, 10 pip might not be much. You might want to hold for the 50 pip move or the potential 100 pip move. Because some of these pairs, especially Euro pairs like Euro NZD, Euro JPY, you can get 100 pips. Like this sale, look how that sale was, straight into profit. It's all red candles, right? This was yesterday. It's 100 pips. So if you're using like a lower time frame, I mean a lower account size, or you're using a lower lot size, then you might have to brace and hold for a few hours. But I know for a fact, y'all not gonna want to be up here with me for no 1, 2, 3, 4, 5, 6, 7 hours. I'm quite sure y'all don't like my voice that much. 7 hours on the Zoom is a lot. I've been on Zooms all the way up to 3, 4, 5 hours. Siobhan and some of the people that's been with us for a while will attest. But why be up here for 7 hours? We could those trades, y'all probably caught them in 10, 15, 20 minutes, maybe 30 minutes to an hour. We'll be done for the day. We can ask questions, we can go over more setups, that way we can look over it on our own time. But if we caught 10 pips on Euro NZD, another 10 pips on GCAD, that's 20 pips on a $100,000 account size, we're done for the day. We could be done. So let's go over gold real quick before we end this training. Look for a buy on gold. It's Friday though. It's Friday. Tweezer top and look, not tweezer top. I'm sorry. This is institutional. This zone is very important here. That's our floor. So look, notice here, it came here, stopped, went all the way up in one candle. What do you did this move right here? Who did this? It was either fundamental news or institutional trading that made this move. Us together, having this golden key, even with a $100,000 account, we all take the trade together. We can't force this 1 hour. Look how huge that candle was. 200 pips. Guess what happened after it came all the way back down 200 pips? And look where it's at. It's back where it started from. Here's the shoe wedge pattern again. Let's go to a lower time frame. That shoe again. Impulse move, pull back. Look where it's doing. Look where it's bouncing from. If this is the ultimate low, do you want to sell from the low or buy from the low? This may be the low. Do you want to wait for it and buy it when I'm gonna wait for it? If it want to go up, you got to at least show me that it breaks this high up here. It's conservative trading. Nothing wrong with that. You got to at least break these highs for me to start buying. That's buying at the high. That's why a lot of retail traders get trapped. If you want to buy gold, it's best to buy it, or anything for that matter, it's best to buy it from the low. How do you know it's the low? Institutional order blocks. It's the low. Look, it was a low at one. It was a low. Look how far it came down, 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 and stopped and hauled ass. This got to be the low. As long as it stays above it, we can't do nothing but go up. So this is a potential buy on gold. Just pay attention to it. Look out for it. I'm not a genie in a bottle or nothing like that. Of course, you got to throw out the disclaimers. You know what I'm saying? Everybody is risking the trading. I am not a financial advisor. We got to put all of that stuff out there, right? But ultimately, I would look for a buy for gold. Would I buy it now? No. I'll just turn on the golden key and wait for it to tell me to buy. 15-minute chart, 5-minute chart. Right now on the 5-minute, notice, okay, so the golden key, notice the golden key, how it had no formation at all, no formation at all. And just within the last 10 minutes, it started giving you that parallel box. Just started. Just started. It's start 9 o'clock. If you want to trade gold, all of this is happening until 9. 9 o'clock, you're going to see the box. You're going to see the zone. Starting at 9:01, you're going to see the zone. So that at least gives you time to get your timing together. If you want to trade gold, you ain't got to be sitting on the chart at 4 p.m. Markets is about to close. You ain't got to sit at the chart at 6, 7 p.m. The zone ain't even ready yet. You ain't got to sit on the chart at 11 a.m., 12 a.m. unless you're following the retest of the zone. If you want to start trading gold and know when to start looking at gold, 9 p.m. with the golden key. That way you can be like, I ain't even trading. If I'm trading gold for the day, I ain't even looking at the chart until 9 p.m. Now, if I want to do my technicals and prepare, I might jump in and maybe 8:30, 8:45. I'm not even, if I'm only trading gold, because you can use this trading tool on gold and trade gold by itself and be very successful. And if that is you, because I know a few gold traders, all they trade is gold. I know some traders, all they trade is NASDAQ. They done got comfortable with the asset, right? So all you trading is gold. If gold is your go-to, and you've already made your $2,000, $3,000 for the day, and it's only 12 noon, I'm not looking at the chart until 9 p.m. because the next zone ain't ready until 9. Why am I trying to force myself in the market at 2 p.m. trying to catch the power hour or the end of day rally? Why? I already caught my $2,000 or already caught my 20 pips or 200 pips. If I'm waiting for a setup, I'm gonna wait until 9 p.m. That at least will alleviate people of their day. They don't have to force themselves in the market, and then you'll have time to do what you want all the way up until 9 p.m. Session key, I believe, is 7 p.m. So if you're trading Forex pairs, you're done for the day. I'm not even looking at the chart until after 7 p.m. because at 7 p.m. is when we started catching those small 10-pip moves. And we're done. It's 9 o'clock. We can be done for the day. I know quite of us, we're trying to find way, even me, juggling with my kids, the business, trading, and other things that I'm trying to put together. I'm trying to juggle my trading time again. Some people have jobs, they have full-time careers. They're trying to find a way to fit in trading on a consistent basis to where they can feel confident on their trades. The tools will help with that, because now you know with the golden key tool, 9 p.m. is going to start firing off. As we see, we got a sell signal already coming in on gold. I'm anticipating a buy overall, but it just gave us a sell on a 5-minute chart, right? Now my buy opportunity, the technical, again, I'm not a genie in a bottle. It might not buy. It might drop another 200 pips. The buy is the long-term setup, but knowing that it's Thursday going into Friday, it might not happen like that, right? That's the long term. Again, we're on a 5-minute chart, which means we're short-term trading. All we're looking for on gold, 10, 20, you can look for 20, 30 pips on gold. 10 pips for the session key. If you're on gold, you can look for 20 pips, right? Say for instance, this one sell signal on a 3-minute chart, if you caught the sell signal at the beginning of the candle, it came down almost 10 pips in less than 3 minutes. It's about 7 pips. 70 points. This is gold, so 70 points, 7 pips. If I'm selling and I noticed that it tried to buy, but it gave us a wick, sold again. Where do we want to buy from? We buy from the top of the zone. And all we're looking for is our 10, 20 pips. So if we sell it, we sell from the entry, the previous low will give you your 15 pips. And that can happen in, this is a 3-minute chart, that can happen in less than 10 minutes. We can get our 10, 15 pips in less than 10 minutes and we done with gold. We're gonna watch, we're gonna see if it gives us that sell, right? I'm anticipating, honestly, if it was like a Tuesday and Wednesday, I'll be looking for the buy. This might be a trap just to get people, entice the people to sell. In order for the buyers to push the market up, they got to have people that are willing to sell at the low so that they can buy it at the low and push it up. So long term, I would look for a buy, but this is, again, short term scout trading, 10, 20 pips. Gold will give you, and if you know gold can give you 100, 200, 300 pips in 24-hour period. I've seen gold go 100 pips up, just like we've seen it. It went 100 pips, 200 pips up, and came all the way back down 200 pips in the same day. $200 pips in 3, 6, 9, 12, 15, 8, in 30 minutes. 200 pips in 30 minutes. You could have been done for the week if you held it. Look how big these candles are. If you're moving your stop loss, you're like, damn, I can't even move it fast enough. You don't caught 100 pips in 10 minutes. You can be on gold, 100 pips. If I take this trade right here, right? Just say for instance, if I'm taking this trade, I'm seeing this shoe pattern, I'm taking it out the zone. I'm seeing this low. It came back to give me a higher high, right? Let's zoom in. This is technical side of trading real quick. But say for instance, even though this blue box isn't our golden key zone, right? But this is a very important zone because of the push down and stop. This is an institutional order block. It gave us a higher high. Look where it stopped at, right at the low of the zone. So if I buy this candle that came back out the zone, that's my entry. We'll get back to that in a minute. This is my entry. If I buy from this first candle that came back out the zone and I ride it up, I see the divergence. I would have got out immediately. That pull, I seen that pullback coming. We'll get to that when we get there. This buy 3, 6, 9, 12 minutes. We caught 200 pips in 12 minutes. So if this is my buy, what is my stop loss? Below the zone, which is about 30, 40 pips. So if I do a 30 pip stop loss at a 2% risk, see if we can find gold in here. Do we even have gold in here? I don't think they do. So if I was to do that, calculate it at 660, let's just even number, $60 a pip. $60 a pip. 200 pips is 12,000. 12,000, and correct my math if I'm wrong. $60 a pip at 100 pips is $6,000. $60 a pip at 200 pips in 15 minutes is $12,000. You can be done for the month in 15 minutes. Trading gold. Guess what? Came back. Came back. I would have took the sell. That's technical trading. I would have took that sell. But guess what? It came back to the zone, into the zone, lower time frame. It came into the zone. Back out the zone, you put another 50 pips in 10 minutes. 50 pips. Again, guess what? It came, all we're looking for is 20. You put your 20 in 3 minutes. You already got your 20. Guess what? It came back to the zone again. Another 85 pips. Back to the zone again, 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 right? So that's just off of that zone. Right now, we're looking at that golden key zone, that little zone that we saw in the lower time frame. Even though on the higher time frame, I'm looking for the buy, we already hit take profit if we had it took the sell. Told us to sell, we got the sell from the high. We resell again in 10 pips. We almost got the 10 pips. We got the 9 pips in profit. We can go to 10 pips, start securing profit. And ordinarily, you can get 20 pips. Just like we was looking for 10 pips on the Forex pairs, you can look for 20 pips on gold on a low time frame. And it went straight into profit. That's an easy trade. Now we might get some resistance, being that we got this wick here. Ultimately, like I said, I'm ultimately looking for the buy from this zone. This little golden key zone, that's short-lived. That's short-lived, short scalps. The real move, I'm looking for the buy out of this blue box, which is nothing to tool. That was just my technical. I don't know why I got a hiccup. Technical trading. I'm looking for the buy out of this box. The sell, of course, we selling from the golden key zone. So it stopped at the box. Buy, came back to the box again. I don't want to go against, I don't want to go too far on y'all, especially if you're brand new. So if you're brand new, don't pay no attention to this blue box. Ultimately, you want to trade from the golden key box. That's going to be a beautiful buy. It's going to look real enticing in the London session. That looks beautiful for a buy. Into a hot time frame. Oh my gosh. And this is gold that we're talking about. Look at that buy, man. On the high, Okay, so hopefully y'all understand. When I was drawing out this box, I was on a lower time frame. I believe it was like a 15-minute or something like that, right? So this box came from somewhere in this wick. Now that we're on a 4-hour time frame, y'all see that wick? Before it shot up the first time, it's the same zone. Y'all notice that? I didn't notice that until I went to the 4-hour candle and scrolled back. It's the same zone. Look how strong this push was to the downside. And then it stopped. And then as soon as it stopped, it turned all the way back around. Why did it stop right here? Who made it stop? Not us. We can't make no market push down like and then just stop and turn around like that with no consolidation. If a whole bunch of people in the sell and they start taking profits and they start closing out their trades, you're going to see consolidation before it moves. Who made it? Who made this stop? That's where the institution and the smart traders come into play. Guess where we're at? For the long term, guess where we're at again? At that same points of interest to where the institutions made a move. So honestly, next week could be a beautiful week for gold to be buying. It's a 4-hour chart. So it's been for the past couple of weeks. It gave you some great moves. Look at this pull, trap. Look at this pull, trap, trap. Once it gets down, it's trapping you. It wants you to buy so that they can sell back to their original point of interest. So they can buy it down here. Now that it's down here, they're going to trap and try to get people to sell and start selling the market so that they can buy it at the low and push it. Hi, this is a longer time trade. We're going to pay close attention to gold next week because I'm definitely seeing a bounce. We might start seeing a bounce as little as London session, just off of where it's at currently right now. But from the golden key, currently from the golden key, notice the golden key 15-minute chart is still forming. It never told us to sell. It never told us to buy. You want to follow the higher time frames for the more conservative or for the stronger trend. On the 3-hour though, it gave you a sale already. I said 3-hour, 3-minute, it gave you a sale already, and you potentially caught 10 pips. Everybody else was still waiting, rubbing their hands, waiting for the sell signal or the buy signal on gold on the hour chart. You, on the other hand, knowing the lower time frames and the way to maximize the tool, you already caught 5 or 10 pips. That's depending on where you sell it from. Where did you sell it from? The most optimal. Do y'all see how small the golden key zone is? Lord have mercy. Now with gold, that zone gonna get smaller and smaller and smaller and smaller. If you wanted to sell from this zone, it told us to sell somewhere in this area, right? It told us to sell, pull back, wick above the zone. If you selling below the zone, look at these sales. This zone by itself is 6 pips. This is gold we're talking about, right? So if you was to sell, stop losses up here. I'm sorry, that's 6 pips. 6 pips stop loss on gold. The zone is 0.6 or 0.6 of a pip. This golden zone is 0.6 of a pip. So if you did see the sell signal on the higher time frame, on the 3-minute or wherever you saw it, and you came down to the 15-second and you're trying to find the optimal entry, it scared you a little bit right here, but then it broke back below. I'm like, oh, okay, I knew we were selling it, trying to kind of scared you a little bit right here. It got back below the zone. Guess what happened? It came back to the zone, and there's your sell. Stop losses again. Previous high, 6 pips. 6 pip stop loss. If you're selling from the zone, below the zone, you caught 12 pips. That's a 1-to-2 ratio on gold, 12 pips. So if you do a 6 pip stop loss on a $100,000 account, you're risking 2% on this one trade. You can do a 33, that's $330 a pip, and you caught 12. That's about $3,600. And I would say what, 3 minutes? Oh, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes, $3,600. Here go that daggone shoe pattern again. Back to the order block, and getting a break back to the upside. Look where it's coming from. That long-term buy is still in effect, but the short-term traders out there using the golden key on the 1 minute chart and getting the entry on a 15-second chart, risk was 6 pips, take profit is 10, 12 pips. You could have earned on a $100,000 account $3,600 in 10 minutes trading gold. So I'm not gonna hold you guys up too long. I don't want this. I forgot I was recording. I should have stopped recording a little bit. But if you guys have any questions whatsoever, I didn't mean to hold you guys up this long. I know I can be long-winded. But y'all know I love trading, so I can talk about this stuff for hours. But if you guys have any questions, feel free to chime in. Or at least you can type it in the chat box. And while we're doing that, while you guys are getting your questions,
Aaron,
yes, ma'am.
what time will your live training be? Have you decided yet?
I want to do with a session key, like we was doing it today. The session key. Usually, I want to start at 6 p.m. for session key. So if we're doing a session key live trading, it'll be at between 6 p.m. and 8 p.m. And if we're doing a golden key session, it'll be between 9 p.m. and 10 p.m.
Okay, thank you.
9 to 11. We should start at 6 o'clock for session key. That way we can kind of go through some of the setups. And then once the setups start firing off on the lower time frame, we can jump in them together. And then same thing with the session key. Once 9 o'clock hits, 9:01, we're already looking at the charts to try to find us an entry. It's already 9:30 or 9:23. We already caught an entry on a 1 minute chart on gold, caught the entry, caught our 10 pips, and we're done. We would have been done at 9:23. Yeah. Other than the questions and answers and stuff like that, we would have caught our 10 pips, made our $1,000, depending on if you're using a funded account or not. We would have made our 10 pips and we would have been done in 30 minutes. But yeah, I'm gonna put up a flyer that way you guys can see the signal or see the session. Some days may change depending on the setup. So some days we may do it on Monday, right? And you guys will know 24 hours in advance at the least. You'll know if it's Monday. Some days I may see a beautiful setup like this. If this was gold and we already had our session on Monday, Tuesday, and Wednesday, and then I see on today is Thursday, but if I see like on Wednesday night that this gold setting up the way it is, I may throw a prompt in of like, you guys, we doing a prompt session at 9. Is some of the markets is looking wonderful. Let's catch these moves. And I might just let you know maybe 5 to 6 hours in advance or sometime within that day. I know Zoom ain't up and we ain't supposed to have a Zoom today, but the market is looking very, very lovely. I think we need to do a Zoom tonight. So, but you guys will know that getting at least the updates in the channel. But ordinarily, the session key trainings and live trainings will start at 6. And then the golden key will start at 9. The days that I'm looking at is Monday, Tuesday, Wednesday, and maybe Thursday for like going over some sessions. I mean, going over like our previous trades and stuff like that. But mainly it's going to be Monday, Tuesday, and Wednesday that we have our sessions. That's when the market is the brightest in my eyes anyway.
Okay, outstanding. Thanks.
Not a problem. Let's see, session key. Let's see if we can, I meant to go over the session key and the golden key. Let's see if we can kind of, I'll say that for next session. We got to save stuff for next session. So, but like I said, if you guys were here earlier when we first started, you can use the session key and the golden key. It may get a little confusing though. So that's why I definitely don't want to do it today. I may save it for the next session or the session after that, because it can get a little confusing. You might get the golden key telling you to buy and then the session key telling you to sell, and you don't know what to do. So I don't want to confuse anybody. So if you're not familiar with it yet, you can kind of look at it, back test it. Now, if it tells you sell, and then the golden key tells you, because the golden key might tell you, well, depending on where the market is at. If it tells you to sell, golden key tells you to sell, and the session key tells you to sell, that's a double confirmation. You can take that trade with ease, right? But it might be some cases, just like here, it might tell you to buy, and then the other one tells you to sell. You don't want to get caught in the trap, but you got to kind of understand where the market is at. So just for briefly, seeing this buy is coming from this golden key box, right? Let's see who's been paying attention. Now notice the sale is coming from outside of this, let's move this, outside of this gray zone. The sell is coming from outside of the zone, right? The golden key is telling us to buy. Which trade would be the more juicier trade? Would be the lower risk to high reward? Would it be taking to buy the buy from the golden key, or would it be taking the sell from the session key? Let's see if you guys, you can either answer in the chat or you can chime in. Which trade option or trade opportunity would you see fit? Which one would you think would be the better trade opportunity? Would it be the buy from the golden key, or would it be the sell from the session key?
The buy.
I say the buy.
The buy.
You're buying it from the bottom.
Buying it from the bottom. See, y'all been paying attention. I love to hear it. That's exactly. You want to buy it because even though it's telling us to sell, it's at the bottom of the zone. And the golden key is telling us to buy already. So if it's telling us to buy from the golden key, we're buying it from the bottom of the zone of the session key. So those small instances is just what we got to pay attention to. Shout out to you guys for the few that answered. That goes to show you guys have been paying attention. And I already know, just off of the first session, some of you guys are already starting to, whether it's demo or not, you guys are already seeing some results. And then we want to keep the ball rolling and make sure not only will you be able to get the results live with us as a team, but once you understand the strategy, you'll be able to, even if it's a Thursday night or a Sunday, you can still do it on your own. That's the main goal, is to make sure that you guys can be efficient enough to be able to do this on your own. But until that time, we got our sessions throughout the week to where we can do it together. So let's, for a minute, let me take off the golden key. Let's see something.
Can we look at EN?
EN, yes, we can. I believe EN gave us a sell, then it hit the stop loss, right? It did. Okay, and that's on depending on the time frame. Let's see. So let's see. Now EN, we were looking for what? What was we looking for on EN? Was that the one we were looking for that sell on? It was. And Lord have mercy, look at that. Back at a point of interest. Okay, so we're overall longer time frame. We're looking for, was looking for that buy. The sell. So if we go up to the original hour chart, let's get rid of, I don't want to do this. Let's get rid of all the drawings. Let's see what it's giving us. For the conservative traders, nobody, the Euro NZD didn't even give us a signal yet, right? But we want to kind of be the early birds and get in early. That's when you go to the 15-minute chart, right? Starting to get the buy. Go down to the 5-minute chart. It gave you a buy and a sell already. So now hopefully y'all see how when the lower you go, the more riskier or the more of a whipsaw you may see, because the zone is getting smaller, and then you may get a buy on one side, a sell on the other side. So when we're on the lower time frame, that's why we want to minimize the stop loss, because ultimately, if you're taking it on an hour time frame, if it says buy, I buy. Like it told me to buy here, I bought. And you got your take profit 1 plus, right? Told me to sell. Oh, that's a bad sell though. That's a huge sell. Oh yeah, this is Euro NZD, so this is a good trade. Euro NZD told me to buy, even though it came close to the stop loss, you still got your buy. It still gave you 80 pips, right? Told you to buy here, pull back a little bit. This is the hour chart. You can put these trades, a good 70 to 80% of these trades, you can just copy and paste them, and it's gonna at least hit take profit 1 or 2. Sell, install, came back to the zone, it still gave you take profit 3, right? So the higher time frame, if you want to just keep it simple, keep it conservative, you might have to risk more of a stop loss. But if you're risking more of a stop loss, then that's when you just come over here. If it's a 40 pip stop loss, instead of doing a 33 standard lot size, people think you're crazy, you just do a 5 standard lot size and make $50 a pip, right? That way you're not risking more. But if you want to keep it conservative, you can just use the hour time frame. I'm just going over the smaller time frames for the ones that, because if you're taking this trade, you're holding it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours, right? Or you can go to the lower time frame. And if you do go to the lower time frame, we just got to understand that it's going to run the risk of the whipsaw. It's going to tell you to buy, tell you to sell. It don't do that much on an hour time frame. If it tell you to buy, it might pull back and draw down a little bit, but 9 times out of 10 or 8 times out of 10, more realistically, it's going to buy. But if you're on a lower time frame, it can tell you to buy, give you 5 pips, tell you to sell, give you 5 pips, and you'll be back in buyer's territory now. I'm like, hold on, wait a minute. I closed out my buy. Did it hit our stop loss? Did the buy hit the stop loss? It didn't. So we still in the buy. The sell, now if you in this buy and then you get into the sell, now you're hedging. One of them is going to be wrong. Which one was wrong? The sell. Buy didn't hit the stop loss. If you're using this as your stop loss from this buy, about 30 pips, 30, 35 pips. It never hit your stop loss. It came back and now you're in profit. The buy is in profit. The sell that you tried to sneak in did hit your stop loss though. So the lower time frames, it just, that's why we got to be more precise with those optimal entries. Because if we wanted to buy, where do we buy from again? Where do we buy from again? We buy from the low. So even though the sale came in, we see the buy. Where do we buy from? The low. And if we did, we already got our 10 pips. 30 pips. Or we could just wait till we buy and it came back. And if we see this buy and then I see this nice little trend channel, I probably would have took a small buy here. You don't have to risk everything. Like if I'm seeing this buy, I don't have to risk a lot because I know my stop loss is 40 pips. But if it comes down here and my stop loss is only 5 pips, I know my lot size is or 10 pips, I can risk 4 times as much. On this trade, I can risk 4 times as much of a lot size. What's our lot size? A $50 a lot. I mean, $50 a pip. On this trade, I can get $200 a pip because my stop loss is much smaller than it was if I was to buy from here up here. But even though it did give us a little fake out on the sale, we was buying at first anyway. This was naturally a good buy indication to get in from the bottom on Euro NZD. Now, I think I was looking for a sell. Initially, this sell here to break the trend channel, get the M pattern and everything like that. If we look, we're still in that pattern. Notice your points of interest, where it's at. Now, if we wanted to sell, where should we sell at? We should sell. And I'm gonna break out the zones. Should sell from either here. Or we got another zone before that. It might not even make it that far. We could sell from here. This wick, top of this wick, the bottom of this wick, that's all institution right there to make it push all the way back down like that. So these are our zones of interest. If we was to want to sell again or find the optimal entry, those are the areas that I would sell at. I wouldn't be buying up here. Why buy up here when we bought it way down here? If I wanted to sell, these are the areas I'll start looking to sell at. Previous areas of resistance. If we want to buy it from somewhere down here. Or if it does what it's doing now, then it comes back to the zone. Like in this case here, like I said, I would have probably bought it on a lower risk or a lower lot size because my risk was more. The stop loss is much wider. But I seen the buy out the zone, came back, retested the zone, and then start buying again. I would have initially bought this I just off of my eyes, but I did see the sale. That's the odd thing about it. I saw the technicals, I saw the sale. That's why I believe I even said it before. I wouldn't even paid attention to the buy because I saw this sale signal. I saw this sale move on a higher time frame. It was just short-lived. But if I didn't see the technicals from the past, I would have seen this buy signal. That's where I would have bought it at. I would have bought it here. And depending on where your stop loss was at, if your stop loss is just using the ordinary stop loss, it never hit your stop loss. You went to draw down a little bit, but it never hit your stop loss. Now, if you wanted to close in this gap, like we was talking about earlier, the stop loss would have been somewhere near here, previous low. So if I'm buying it from here, stop loss previous low, now I'll minimize my risk a little bit. Now my risk went from 30 pips to 15 pips. But notice it hit my stop loss. It hit the stop loss if I do that. So in some cases, this will save you from risking a lot, but this will also put you in an opportunity to where you was originally right because it never really came to the ultimate stop loss, but you lost 15 pips before the initial move even happened. So that's really based off the trader's appetite, what they're looking at the chart, what they're seeing based off of back testing, just kind of go with your gut initially as a trader, or just in life. You just sometimes just go with your gut. If you're unfamiliar, what does the gut tell you? Sometimes we just need to go with our gut, right? So but when you start second guessing yourself, you start questioning what you're looking at, then it'll confuse you, and then the market will start looking confusing, or you don't necessarily know where to go, and you start revenge trading or hedge trading, is that and the other. But to refrain from that, naturally, we just follow the zone. We buying outside the zone. If we're outside the zone, where do we want to buy at? Ultimately, I would have bought here. If I lost it, so what? I lost 15 pips, right? I got back in the zone. I'm back in the zone. Do I want to buy from the low or sell right now? Even though it's telling me to sell, the better appetite or the better trade would be to buy from here. If I am wrong and it does sell, I only lose 10 pips. So what? But if I am right, and it does, because it did buy at one point in time, if it does buy from here, I'm up 30 pips. Hold on, you guys. You go check on my daughter. She's a little extra quiet up there. Her brother's watching them, but let me go check on her real quick, and I'm gonna be right back. All right, you guys. Hopefully I didn't bore you guys. Hopefully you guys learned something. Shout out to the ones that are still here with us in the long run. Shout out to the ones that actually took some trades and made some profits. Even if it's on demo, practice makes perfect, man. Profit is profit. You might not be able to withdraw it, but it still makes you feel good when you see him making the right decision and getting fluent with some of these tools, which is ultimately gaining confidence in yourself. So when you do start trading on a live account or a funded account, you already know what time it is. So hopefully, you guys, if do you have any questions before I end, I'm gonna stop the recording now. But do you guys have any questions? Thank you, ma'am. Thank you, ma'am. Y'all are real MVPs, man. We've been up here for almost, 3 hours, and y'all still with me, man. For all 7 of y'all. Y'all are MVPs, man. We see great things in our future together. But if you guys don't have any questions, I'm gonna go ahead and end the session. Hopefully you guys have an amazing, if I don't get to talk to you formally, we'll be in the chat, but hopefully you guys have an amazing weekend. Spend some time with your family, hug on your loved ones, tell them you love them, relax, kick your feet up a little bit. And we'll be back fresh on Monday. Yes, ma'am.
Thank you, Aaron.
Not a problem.
I think I know, your voice sounds familiar. I think I was on a Rinko's training you did some time ago, way back with somebody else.
Probably was Rinko, probably me and Siobhan.
Yeah. Okay, well, thank you. Have a good evening.
Not a problem. You do as well.